Everyone. A very good morning. I'm Anshu Budhia and I'm your trainer for the tax batch. Good morning, Kritika. Good morning, Mohammed. Good morning, Deepika, Monica, Jules, Ashna. A very good morning. And good morning, Hiral. Okay. I do hope that everybody is all set for the tax batch and you all have got the books. In case if not, then try to get the books as early as possible. Okay. Now, as we begin, the batch that we are taking is applicable for June and September attempts. So please prepare yourself accordingly. And we are going to be progressing ahead with the sessions, and roughly by almost mid of May, we should be done with the sessions. Okay. Now we'll be going at a medium pace and we will be taking care of the questions from the exam kit as well as your complete conceptual clarity along with the notes from your workbook. So I would be now requiring all of you. I can give you the leverage for this weekend, but then I'm going to be giving you homeworks consistently. You all have to do your work. Okay, we will be discussing the answers and so that would help you to cover your syllabus along with the sessions, and it also helps you to understand how better you understood the concept and the topic and how better you are able to apply them in the exam. Okay, so it's always better to go along with the classes. Guys, all of you try to be regular with the live sessions rather than being very irregular. It's always good to go with the sessions so that you are understanding, you're learning the concepts over there, you're applying them, the implementation. We are discussing the questions from the exam kit. So everything at one place, and you are more organized when you go with the live sessions. So I really recommend all of you to go with the sessions on a regular basis rather than on an irregular basis. Okay. Now, yes, based on the past trends also, the students who have been very regular with the live sessions, of course, they have an upper edge, okay, in the marks and they score really well, uh, because of the regularity that they had and the sincerity. You have any questions, any queries during the sessions, you can ask me any number of times without any queries after the sessions also. And I'm there with the WhatsApp support, so that is also there. But then generally I recommend that when we're having live sessions, let's resolve the query live in the class, because then it becomes more better to understand. Okay, so but yes, WhatsApp support is also there. And so, but at your end, what is needed is 100% dedication, sincerity, okay, towards the classes. So I really required that point, only this much from all of you, to be regular, to be consistent, and to complete your work properly and on time. So that, so the major agenda is by the time we finish up with our syllabus, almost you are also done with your syllabus. So in the balance time, those who are targeting June, in the balance 15-20 days that are left after the sessions are over, you are revising and you're doing mocks, question papers and all. So you get that much of time. Okay. Okay. Now let me give you an idea about what we are going to study. Yeah, let me give an idea about what we are going to study. And also, I really don't know how many of you have visited ACCA Global website. So we will be visiting that site. We will be looking into the subject. And from day one only, there are few areas that you should be covering from the ACCA website. Okay, in order for better attempt, for better scoring, and also to know from the examiner's point of view what exactly are they needing and how you are progressing in that direction or not. Okay, so we will be looking into all these areas, and I'll just share the screen. Just give me a moment. I'll open the book and we share. Okay. I'm sharing the screen. So again, I'm repeating it. Guys, wherever you are stuck, you are not able to understand something, or you want more clarity on it, you want more discussion on it, just put it, in your chat box without any second thoughts. And there is no limit on the queries that you can ask. I will resolve them. And when I am asking you questions, the same applies to all of you. That means you will have to answer those questions. So your complete focus in the class is very much needed. Okay, people. So this is what your books looks like. We are going to follow FA 23. FA is nothing but the Finance Act that is getting applied here. So the Finance Act that got passed in 2023 is getting applied for your exams for June 2024 till March 2025. For this entire period of 4 attempts, you will have this FA 23 applicable. Okay, so this book we are going to follow. Some areas I'm going to focus, some areas that you should be understanding. Now, the syllabus that we are covering is spread across 25 chapters. Don't look at the quantum. They're very interesting because I personally feel taxation is very interesting. For the very reason that it's completely practical based, you really don't have to go into much theory. It is just you have to understand the concept, look into the tax rules, tax laws that we will be discussing in the class, and then apply them in the questions. So it's very interesting to do. Excuse me. Just that you have to focus. And I'll tell you why you have to focus as we proceed in this subsequent topics that I'm going to cover now. Okay, so we'll be starting from chapter 1 and going on till chapter 25, covering all the chapters, all the topics, all the sections. Okay, now please just understand the focus of ACCA examination when they are judging you for Tax UK. So the focus is you really don't have to mug up things. They are not expecting you to mug up all the rules, all the sections. Okay, they are expecting you to understand how to calculate taxation, how to apply the different rules, exemptions, and the other, allowances, and then calculate the tax liability. So the focus is on calculation of the taxes, the liabilities, the allowances, the exemptions, and the other criteria that will be asked in the question. There are some areas though that you need to learn, because generally I really don't encourage my students to learn anything. We understand everything conceptually and then we apply that in the class. But there's some areas in taxation that you need to learn from day one, like what is the due date? Okay, what is the due date of paying a particular tax? Because there are different chapters, different dates that will be covered. So those due dates you will have to learn. I'll tell you a strategy. How would you learn as we proceed in the chapter? And then the penalty rates, the interest rates, the ones which are not going to be given to you in the exam, that you have to learn. There are going to be a lot of data that is going to be given to you in the exam that you don't need to learn. And also, guys, when we practice more, as we practice more, those things will instantly come into your mind. So that too much of learning is not there here. Okay. Now, you are expected to have a detailed knowledge of certain taxes like VAT, like chargeable gains tax that we call as capital gain tax, inheritance tax, national insurance contributions, the income tax liabilities for self-employment, employment, investments. Okay, all these detailed knowledge is required for the calculation of tax liabilities. However, I'm not assuming that you're going to carry some knowledge. So all those who are carrying the knowledge of Indian taxes, because many of us have, please wipe it out completely and then have a fresh start for the UK taxes. because there is no similarity between Indian tax rules and UK tax rules. Okay, so we are not going to be doing a comparison. We are not going to understand why in India the taxability is like that and why in UK taxability is like that. They both are different. So you're going to keep it different at different. Okay, don't carry any basic knowledge of Indian taxes. Okay, we will be looking into one of the very important areas from your examination point of view, especially from section C point of view, your tax planning questions. So tax planning techniques, tax planning questions start from day one only. Now I teach ATX also. So I'm telling you the basic knowledge of tax that you are understanding here. The knowledge that you have gained in taxes is completely 100% applied in ATX. So those students who have had taxes in their skills and they've understood it well, they find themselves in a comfortable position in ATX because almost 60% of ATX is your tax skills. 40% is what is new for ATX. So it is completely a progressive change from taxes to advanced taxes. Okay, all of you are well aware, I'm sure of this, but still I'll repeat it. Your exam is completely computer based exam. You have two options of giving your exam. Either you can book the exam at the center that is convenient to you, or you can book a remote exam also by giving the exam sitting at home. So both these exam dates you can book on your My ACCA platform. Okay. Now, uh, from the examination point of view, there is no optional question that will be there. All the questions are going to be compulsory. There is no negative marking in ACCA. So that's the best part. That means you should not leave any question unanswered, even if you're not very sure of it. Give it your best estimate and select the answer. Because there is no negative marking in ACCA. Third and the foremost thing is the minimum passing marks individual for each subject is 50%. Now, many times students ask me, ma'am, is there any minimum passing marks for the group as a whole? No, there is no group concept in ECC. It's only individual papers. So every individual paper, you have to get minimum 50% pass. But for my students, I don't keep this as a target. So we're not studying here to pass. From day one, we will have an agenda in our head that we are studying to get a rank. Okay, so you're not studying here to get just 50%. And I'm sure you will get. But what I'm preparing you all and what you are preparing yourselves is attaining a rank. Okay, so target is not 50%, target is attaining that rank. So 90% or 85% is what you are setting a target for. Study in the way that you will be achieving those marks from day one, not from day 90. Okay. Now, one of the other questions also that I generally come across is, ma'am, can you please tell me some important areas? It's a professional exam. Everything is important. Every section, every clause, every small point is important. So there is nothing called these are important and the questions will definitely get clicked. You will have topics, you will have everything. A combined question will be asked in, which is covering 2-3 topics, 2-3, chapters, 4-5 chapters. So it's not an individually one chapter or one question will be there. Got it? It's a mixture of those chapters that will be there. So people, there is nothing important from day one. We are going to assume everything is important. Give equal weightage to everything, every calculation, every smaller section also. Now let's understand your paper pattern. So your exam paper is divided into 3 categories. Total time allowed is 3 hours strictly. Okay, there will be timer running on the screen. The paper is divided into 3 sections. Section A, Section B, and Section C. Section A has got 15 objective type questions. Now, what are the different objective type questions that can be asked? I will give you a glimpse today. Okay. Each question is for 2 marks. Interesting part in Section A is if you get the correct answer, you will get 2. If you get the wrong answer, you will get 0. If you get half answer correct and half wrong, no partial marking. It will be either 0 or 2. Suppose if the question has got 4 options and you have to select for each 4 options true or false. You selected for 3 options correct answer, true, and for 1 option your answer was wrong. You will not get any partial marks, you will get 0. Only if all the parts are correct, you will get 2, otherwise 0. Okay, so that's the beauty of section A. But then, yes, it is something that you have to pay attention to also, because these are easy marks of 2. These are easy marks to score, 2 marks each. But then at the same time, some options are confusing. So you have to run your brains and then select the correct answer. That we will do during the course of the classes. We will be taking care of these questions. Section B, the second section. Now, if you see first section, section A was covering 15 questions that would be asked from anywhere in the syllabus. Any random 15 questions. But when I say section B, again it has got 15 questions of 2 marks each. Again the same rule, either you will get 0 or you will get. But then what is the difference between section A and B? In section B, you will have 3 different scenarios given. Question number 1, one scenario is given. Relating to that scenario, you will have 5 questions. Question number 2, a different scenario will be given from anywhere in the syllabus. Relating to that scenario, you will have 5 questions. And likewise for question 3. So you'll have 3 different scenarios, each scenario having 5 questions. 5 into 3, 15 questions. Each question for 2 marks each. Got it? Now, going to section C, it has got 3 sections. Now, it is the only skills paper that has got 3 questions in section C. Generally, all the other skills papers have only 2 questions. So here, one question is for 10 marks and 2 questions are for 15 marks. Now, this is the only section which is marked by examiner. Section A and B, since it is computer-based exam, it is marked, by the computer system only, the software. Section C is read by the examiner and marked by the examiner. Clear? Now it is got step marking. So section C has got step marking. Section A and B don't have step marking. So in section C, suppose if it's a 10 marks question and you got some portion correct, some portion wrong, you will not get 0. You will get step marks for the portions that were done correctly by you. Likewise, for the 2 questions of 15 marks, if you have done some mistake, if you have done some, errors, you will not get 0, you will get step marks. So 1 question of 10 marks, 2 questions of 15 marks. Total becomes 40 marks. Section A and B individually each 30 marks each. Total becomes 100 marks. No optional question. Okay, and it is going to be done keeping in mind that entire syllabus is going to be judged in the exam. For section A and B, I can certainly say that entire syllabus is covering over there. For section C, it is divided in a way that 1 question of 15 marks will be covering individual taxation compulsory. 1 question of 15 marks, the other question of 15 marks will be covering corporation taxes. Corporation means companies' taxes for 15 marks. So 15 marks, 2 questions areas now one is for individuals and 1 area is covering corporations. The other question for 10 marks, okay, we have 1 question for 10 marks. So the other question for 10 marks is going to come from anywhere in the syllabus. Anywhere. So that 1 question of 10 marks is anywhere in the syllabus and 2 questions of 15 marks, I've told you the area where it will come from. I hope till this point, it's all clear how your examination will look like or your area will look like. Any doubts and queries till this part? Now, some skills that are the basic skills that you are generally expected to carry in the exam is your answer planning skill, correct interpretation of requirements, highly needed, efficient numerical analysis done by you, effective writing and presentation for the theory-based answers, good time management, completing the paper in 3 hours, managing information and presenting it well. Okay, so all these areas, all these skills are getting covered for your answering. All of you, I'm sure you all are having very, you all are having hands-on experience on Microsoft Excel. If you don't have, please ensure that when we are doing questions, and especially section C questions, and in fact, I would say only section C questions, please practice on initially in the Microsoft Excel only, not on pen, paper, anywhere else. Section C questions that we will be proceeding ahead after some chapters. And then after some time, please do those questions on the constructed workspace on ACCA Global only. I'll tell you where you will find them. Okay, in the due course, I would be guiding you for the same. Because we need to practice in that ACCA platform with the Excel and the other things so that you're comfortable and compatible with that software. And when you're doing exams, you're absolutely at ease and you're not having difficulty, in navigating in that Excel sheet. So I'll ensure that we do it in the sessions on a phased manner. The time limits, how much time you should be devoting to section A, section B, section C, I would be guiding you as we will be doing the questions when when we'll be proceeding ahead with the chapters. And people, whenever we do questions in the class, generally I put a timer. I always keep a stopwatch with me. I put a timer so that I try to make you all ready during the study time only to answer the particular question within the time given, so that you all also have to speed up from day one. If we do keep on doing these exercises from the start of the classes, so by the end of the classes, you are at the most convenient position where you don't have to worry about how to use the ACCA Global, that Excel sheet that will be given to you in the exam. Okay, how to do the questions more quickly, manage your time. Because all that skills area I will be covering in the class only. One thing, one habit that you have to inculcate from day one only is how to read a question. There is a technique to read the question. That when I'll be doing that question in the class, I will be showing you how to read the question the proper way in the exam, and how to attend the question the proper way in the exam. So that two things. Number one, you should get accurate and correct answers. Number two, you should do the questions more quickly and promptly. So that skill will also get developed. Till this point, any questions, any queries you all have? Anything that you have to ask, guys? Anyone? Any questions and queries? Yes or no? Put that in the chat box, people. Come on, let's be participative. Communicate with me through the chat box. Ashna, Deepika, Hiral, Jose, Kritika, Monica, Omer, any questions? All clear, 100%? That's great. Now let's do one thing. Let's visit the favorite website, the website that is your second home now, right? I always call it as a second virtual home. Every week, every alternate day, you should be visiting the website when we're doing the chapters in a regular basis for the various resources that are available, okay, and study there. So I'll show you. I'm opening the ACCA Global site. All of you just watch or just have a look at my screen. Now, I'm on the ACCA Global website. If you have not visited the site so far, please type accaglobal.com and you will be on this site. Now, I'll go to student. I'll go to study support resources. ACCA qualification. Select your subject. It is taxation. Okay. Let's first have Introduction to Taxation. So it's a video by your ACCA Global. Let's have a look at it. In case if anyone who's not able to hear the sound or has some video issues that you're not able to watch it properly, clearly, anything like that, just put up in the chat box, okay? And just pay attention to this video.
This exam develops your knowledge and skills relating to the tax system as applicable to individuals, single companies, and groups of companies. ACCA recommends studies.
Wait, I'll restart it.
This exam develops your knowledge and skills relating to the tax system as applicable to individuals, single companies, and groups of companies. ACCA recommends studying with an approved learning partner and using study materials from our approved content providers. However you study, ACCA will support your learning journey with a range of free resources. The Examiner's Approach article is a good place to start. There are also technical and exam technique articles to further refine your knowledge and skills. To practice and perfect your exam technique, the CBE Practice Platform replicates the real exam experience and allows you to practice up-to-date exam standard questions before marking and reviewing your answers using detailed marking guides and model answers. Currently, the UK tax exam is available on the Practice Platform and more versions will be added over time. The exam has 3 sections. Section A has 15 objective test questions, each worth 2 marks. Section B has 3 objective test cases with 5 objective test questions worth 2 marks each. That's 10 marks per case. Be sure to read the cases and requirements carefully. Section C is worth 40 marks in total and has 3 scenarios which typically relate to 3 requirements. Remember to present all your workings. Using the resources available from ACCA and your learning partner is the proven route to exam success. So good luck with your studies and exam from everyone at ACCA.
Yeah, I hope you got an insight about summarized view of how you can use your free study support resources as well. They're free. Okay, you don't have to pay for them. Now let's look at some resources that I really want you all to visit from day one only. Okay. This number 1, examining team guidance. Okay, I would be playing this video here as well. Okay, this is just to guide you about how you should go ahead with your tax answering. And this is coming directly from the examining team. So it's very, very essential. And I'll just play this video and then I'll take you to the next section of examiner's report. Okay, today I am not expecting you all to solve the questions, definitely. So there are some questions given, there are some understanding and solving of those questions. I'll take it in a quick way just to make you familiarize with, what kind of approaches is examining team requiring from you all. So you should understand that from day one only.
This is a brief presentation designed to provide you with some general advice to help to improve your performance in taxation, TX-UK. This has been written from the point of view of the TX-UK examining team, although some of the advice may be relevant to candidates sitting any of the other TX variant exams. At TX-UK, you should expect to see some thinking type questions, which are designed to provide you with an introduction to the type of question you might see at ATX. Candidates often struggle with these questions and worry about how best to tackle these. A key piece of advice here would be think more, write less. To illustrate this point, let's take a look at an example of this type of question. This question is taken from question 2D of the past exams sample September-December 2021 from the ACCA Practice Tax Saving and Reduction if the problem looking at. In Part C, calculations of Amanda's income tax liability and Child B to fully repair this would most likely have taken a lot longer than the 5 minutes or so available. If you are prepared to think a bit more and write a bit less, you may have been able to come up with a more efficient approach. Let's take a look at the recommended solution to C. From candidates. Let's look now at some common questions.
I skipped the solution and the answer for the only reason the question and the answer because we've not done those topics, so you'll not be able to understand anything. Once we cover those topics, you can always come back to this video. Okay?
We've had from candidates. What are the core areas for Section B and Section C of the TX exam? The whole syllabus is the answer. One of the 15-mark questions will focus on income tax and the other 15-mark question will focus on corporate tax, but the 3 10-mark questions in Section B and the 10-mark question in Section C can cover any area of the syllabus. What are common pitfalls in the exam? Not managing time well and spending too long on some questions and not leaving enough time to do the remaining questions, and not reading the requirements properly.
From my experience for the last 8 years of teaching ACCA, okay, and almost now on my probably the 10th, 11th batch of, and more than that, I've not counted of taxes, I have come across that the apart from the other points that will be coming in, these two are the most common points for the students, especially the ones, those who are stuck between 40 to 50. The only reason is, I keep on telling you from day one that please practice within the time limits. Please practice within the time limits. Please practice on the CBE's platform. But some of you take it seriously. Some of you think that, okay, we still started the classes. What is the hurry? Let's do it after 15 classes. Let's do it after maybe start in the month of May. You're having offers, you're having n number of things. I understand completely. But this is a habit that you have to develop from day one. When you're doing this course, please do it more sincerely. Take out time from your everyday schedule and add it as a daily activity of doing questions. Okay, so that will help you not just in managing time, but also that will help you to plan your answers well and to get the correct answers. Second important area where the students falter is not reading the requirements carefully. I always say, and this is a saying by, in fact, by many ACC experts also, your 50% of the answer is within the question if you read it properly. Half of the data is within the question, half you have to calculate. What you have to do, what is the question asking you, that planning you can do only by reading the question well. So you have to read the requirements carefully but quickly. That will only happen when you practice more. Okay, so the more you practice, the more you're attentive in the sessions to get that concepts correct, to know how to apply them, then you will have definitely more accuracy in your answers. Okay, let's go ahead.
So not fully addressing the question, or alternatively answering the question you would have preferred to have been asked. Marks are only available for correct answers that are relevant to the requirements, so it's important not to waste time on anything that cannot gain any marks. Will I lose marks if I make a mistake early on in a Section C question? If you make a mistake early on in the answer, this will not affect you picking up the rest of the marks in the answer, as ACCA always apply an own figure rule. This is why appropriate workings are so important, so the marker can see what you have done. So show your workings and be confident with your calculations. How do I remember payment and other dates? Unfortunately, there's no easy answer here, and the saying practice makes perfect comes to mind. It really just comes down to practice and revision. It may help to ask someone to test you on dates to help you to revise for them, and then you might get an indication of which ones you struggle to remember.
As during the course, I would be sharing a summarized file, summarized PDF, which is going to be covering all the dates, rates at one place, your penalty rates, so that it makes your life easier in revising. Okay, so that I would be sharing you during the course of the classes. So I hope now you got to understand that what exactly is your expectation, is the expectations from the examiner, how you have to plan your studies, and you don't have to wait for the 15th class to be over or for May month to come and then go back to your studies. You have to start from today only, that is 9th of March only. If you do it on a consistent basis, along with your office, along with other commitments that you have, and you may some of you may be covering one more subject also, then you can do that also comfortably if you start studying regularly, sincerely from day one only. Okay, and be regular with the classes. So it is not a burden on you to go through the recordings and complete the portions, because that is already completed in the live session, so your task is over for that. Now what you have to do after the classes is only revising and practicing, that's all. So that won't take much time, considering that we have weekend classes, so you have a whole weekday available. In fact, after the class time, you have entire evening, night available. So anytime you can take out that extra hour to practice. I'll show you one more thing. Now, this is something that you have to visit regularly. Okay, I mean, after some time, so 3-4 chapters are over, then you can visit here. Now, what is it? This is basically first an understanding of examiner's approach. Okay, and then the details about how the exam technique that you should apply and the practice platforms and all are there. I'll take you to other topics also. Now here we have a topic, examiner's report. Highly important, desirable, all of you should visit. But don't visit it in the month of May where all reports you'll visit together. So the corrects that you should be doing in applying to your answers will be missing out. So examiner's report, here I'm taking my version, which is UK. You can see here 1, 2, 3, 4, 5, 6 reports are there. These are nothing but if I just open one, this is September, December 23. You will find March 24 also in some time, in some days. So the attempt which has already taken place, it is a report prepared by the examiner. Randomly, some questions are picked. Like for section A, there are 4 questions which are picked. Section B, 1 question. Section C, 1 question. Okay, so the question is given to you that came in the exam. So you will also know in the past papers what kind of section A and section B randomly have come. Some 5 questions section A, 1 question section B is given. And here examining team is guiding you that, okay, this was the answer that should be the correct answer, where some of the students faltered in giving the answer. Okay, what was the mistakes which were there made by the common mistakes done by a major group of students? What should have been the correct approach? So this all is given in this report. Term by session, this report is there. Okay, so I really recommend all of you that once we are covering not 3, 4, I'll say 9, 10 chapters, visit this regularly. There are only 6 reports. 6 days is what is needed. Okay, so you will get to know from early on only Were you also in that category of the students who were doing a mistake, which was very common? So if you are, you will be able to come out of that and correct yourself more better. Okay. So it's just like better refining your answering skills and you're getting your more accurate answers. Okay. Now, other areas, so we have covered examining team reports that I really expect you all to go through. I would be also covering one report, but later in the course, I would be covering that report. Okay. Now you have technical articles and topic explainers being written by the senior ACCA's experts or examiners. So this is just an article given. Okay, technical articles for UK exams is there. You are using UK variants. You follow UK variants. Okay. Now here, we would be covering all these topics in the exam. In our syllabus, in our course, we will be covering all these topics. But these articles are given to better refine your knowledge. Okay, to better give clarity on these topics, more refine it, more in detail. These discussions are given. So I really recommend that when we are completing some chapters, there are videos, there are articles given here. You can follow these. There's no harm in going through these video in topics. Once we're completing a particular topic or a particular chapter, that will give you more clarity because there are more examples given you apart from the examples that are given in the book, right? So it will give you more clarity, more refinement will be there. So I really recommend all of you, please go through this resources and apply them as the case may be. Okay, now this is your tax exam mock and CB exams. Your past papers all are there on your MyACCA platform. In case if you have not visited, let me take you to that. I'll choose my variant UK. Suppose here I'll choose my ACCA specimen exam. I'll log in to my ACCA. This is the kind of exam you'll find in there. I mean, this is the kind that you'll find in the exam. Sometimes it gets stuck. Okay, I'll just show you here. Catalog, you will select when you go on to these platforms. You select taxation. I was talking to you about the CB constructed workspace that when you're writing section C answers, ideal recommendation is write it in the CB platform. So this is a blank workspace that you can assign yourself. Once you assign, it will come here in the list. Okay, like suppose here it is blank workspace. Okay, no, this is specimen exam. Yeah, this is workspace. Suppose here I've assigned for taxation. I'll open it. Okay, this is no scenario is given here. The question is in front of you in the book probably. And this is the screen given. This is the word screen for writing theory answers. And this is the Excel screen for doing your calculations. If you do it here, you would know that what kind of the Excel properties you can use. Okay, or there's many Excel functions that are disabled here. So it's better to practice here, understanding the scrolling things, understanding what formulas you can write. I mean, what shortcuts you can use, how you can write and type in the answer here. Please start with this practice when we are doing section C questions. When we have covered those substantial chapters, I'll begin with those section C questions in the class. So then I would really recommend all of you to use the CB workspace as much as possible. Okay, because initially it will take time to do questions in this. The reason being, it is not as quick, as faster, and it doesn't have those shortcuts and the other, functions that are available to a Microsoft Excel. Very limited functions are there. So you should make yourself used to of this screen. Because whether you are giving any skills paper, you would be getting the same screen only. Okay, now I'll select my ACC official resources. I'm showing you here. This is the past exam library. You have the 7 papers, past papers are there. Now, March paper will also get added here. Okay. Then you have practice exams. So these are 3 mock exams given on the CBE platform. This is a CBE platform. Now, it is exactly in the same environment as you will find your main exams to be. Same constructed workspace and everything is here only. So these are compulsory to attempt these 3 mocks. And then this is one specimen exam. Okay. So these are kind of 4 mocks that are made available here free of cost. And 7 past papers, around 11 papers to practice from. Quite a lot. You practice this much, you are well done for the class, for the exams. You're well set for the exams. Fine. Okay, yeah, that's all. That's all for this CB platform. Now, before I begin with the first chapter, all of you, please just tell me if there's anything that anybody has to ask. Any questions, any queries? I mean, anything till now that you have a question to ask, please feel free to ask me in the chat box. Okay, then let's move ahead to chapter 1 and let's begin with your syllabus. Okay, before I move ahead, I really recommend all of you, if you're using PDFs by any chance, please use ebooks. The reason being, this is the ebook access that it is there. You have all the chapters available with you in this way, where you can individually visit one chapter instead of doing so much of scrolling up and down in the PDFs. Now, apart from that, we have essential reading available here. This is an extra detailed, understanding of a particular chapter. Like chapter 1, if there's an essential reading to chapter 1 here, it's in detail, or other points also are covered here, which are not covered in chapter 1. So it's a essential reading is those additional material linked to chapter 1. Again, chapter wise chapters, this essential reading is available. Now you have this question bank apart from the exam kit. Okay, this is an extra question bank apart from the exam kit to help you with the extra questions. And then the solution is there. So it's very easy to scroll through, to navigate, to do the questions when you're having ebooks. In case if you have not, please get the books from the team. Now, some of you may be using the older variants. If you're using, any of you are using the older books, the ones, that was FA22, no problems. Wherever we are having changes in FA23, I will be highlighting that. And you refer your book, just make the changes over there. That will do. Okay? Okay. So now we begin with the syllabus. Okay, let's have the first chapter, Introduction to the UK tax systems. So let's have an understanding about what is the UK tax system like. Okay, what are we going to cover here? What are the different taxes that we are going to be covering here? All this understanding, let's have it here. Okay, so now I will make this flowchart to get you an idea about how, what are the different taxes that we are going to be covering here. So before this, I would be just adding few. I would be sharing with you the notes in Excel. The reason I share the notes in Excel and not PPTs is not, I don't want you to read it so that you'll scroll down and read PPTs. No, wherever there are formulas, there are questions, the notes that are there, when you're doing a topic, you can just solve it there parallelly, just adjacent to those notes. so that you would know that whether you're doing the question correctly or wrongly. You don't have to open a separate Excel screen for practicing. You can practice it then and there only. Okay, one important point I think I did not share. Section A and B, don't try on Excel. Don't do on Excel. The reason being, for section A and B, you will not have access to Excel in the exam. For section A and B, please use the calculators and the rough paper to do the questions. From that, today only when you're doing questions, don't do them on section C. Because you'll not get section C for section A and B. Sorry, you'll not get Excel screen for section A and B in the exam. Okay, let me just draw this flowchart to make you understand with the basic UK tax system. So I'm giving the heading, the UK tax systems. The UK tax system would do. Now, so basically our taxes are primarily divided into two major categories. Which are the two major categories? Individuals. And the next category is companies / corporations, because you'll find in the exam the term corporations more. Now here I can cover individuals, which cover sole traders, employees, as well as partners of the partners in the partnership. Okay, and in companies and corporations, we are simply covering the companies. Okay, now what are the different taxes that we'll be covering for individuals? I'll just make a list here. First, that we are going to be covering income tax. Second, NIC, National Insurance Contributions. Okay, so national insurance contributions will be covered from employees' point of view, from employers' point of view, and from self-employed. The third taxes that we are going to cover here for individuals is chargeable gains, taxable, chargeable gains liabilities. Fourth taxes that we are going to be covering for individuals, focusing on individuals, is inheritance tax. Okay, now for companies, primarily for companies, we are going to be covering the taxes like corporation tax liabilities, and corporation tax liabilities we would be covering for individual companies, the calculation of corporation tax liabilities for individual companies as well as group of companies. Now, I'll cover one more term here, that is VAT. VAT is going to be common for both individuals and corporations. I mean, for both, we will be doing the calculation by the same rules. Okay. So I hope now you know what we are going to be studying here. So we will be studying the income tax liabilities. Whenever the term income tax is there, that means it is relating to individuals. Okay. We don't say income tax for companies. We just say corporation tax for companies. National insurance contributions. However, if the employer is a company, the company will also be subject to national insurance contributions. Okay. If the employer is a company. Then chargeable gains liabilities, inheritance tax liabilities. Now you will say, ma'am, chargeable gain liabilities is not applicable to companies. It is applicable, but we don't pay chargeable gain tax here. Everything is covered under the corporation tax only. Okay, so it is just that companies pay one tax only, corporation tax. Individuals pay different kind of taxes. They pay IHT tax, they pay CGT tax, they pay income taxes, they pay the NICs. Okay. And VAT is common for both individuals and companies, both bear them. Clear? Okay, let's go ahead and understand one more area. Yeah, I will be taking NIC. See, NICs, I'll just give you a brief up about what is an NIC. NIC is National Insurance Contributions. It is not typically a tax, but then the nature actually ends up being a tax. Meaning what? Like, have you heard of ESIC in India? The government employees generally they contribute towards the insurance contributions for their future, but what is the benefit of doing that contribution is whenever they want to visit the hospitals and all, they will get the treatment done free of cost or at a very very subsidized cost, correct? They don't get anything in back. So when they are making insurance contributions, we don't get anything in back like we do the pension contributions and all, where we get pension corpus, nothing like this. It is just that it is giving them a medical facility, medical advantage. Same is there for national insurance contribution. So what happens in UK, it is not just the government employees, every person who is a resident of UK, okay, to whom the UK taxes apply, they have to, or basically every citizen of UK also, they have to contribute towards the national insurance corpus. So there's a fund which is created, which is called as national insurance, because you must be keeping hearing, you must keep hearing if you're visited in UK, or if some of your friends have visited in UK, they always say that, medical facilities are free of cost there. So it is not that government is funding them completely. It is employer, employees, self-employed people, unemployed people, everyone. They have to contribute a particular portion based on their profits that they're earning, the salaries that they're earning. So based on those profits and all, they have to make contribution towards their national insurance contribution. Okay. So they have to contribute towards their national insurance. And the only benefit is that when they make the contributions, they will get the facilities free of cost at very subsidized cost and completely available to. Got it? So I hope now you're clear. Uh, uh, just give me a moment. Okay. So I hope till this point you have crystal clarity, all of you. This is my favorite term that I'll be using throughout the session, because I want the clarity as clear as a crystal in your head. Okay, now people, let's go ahead and let's discuss the different types of taxes. So extending this explanation, I am categorizing these taxes into two categories now. Okay, so we are starting the taxes in two categories. Number first category is direct tax, and the second category is an indirect tax. Okay, but do you know basically what is the difference between a direct tax and an indirect tax? Okay, don't give me any typical definition. Just tell me in a simple language why a tax is called as a direct tax and why a tax is categorized as an indirect tax. Quickly put it in the chat box. All of you, come on, let's have answers. Even if you know it partially, write it. Okay, there is no problem. Whatever you know, just type it in the chat box. What is the difference between a direct tax and an indirect tax? Let's have some answers. Deepika, Ashna, Hiril, Jose, Kritika, Monica, Omi, Rahul, all of you give answers. Wonderful, Ashna, very good. But it's pretty incomplete. I'll complete it. Okay, not exactly correct, Omer. Yes, in a way, you have tried to give the understanding that I got it, but let's elaborate it. Kritika, okay, wonderful. Yeah, very good, Kritika. Yes, very good, Ashna. Examples are very good. Others, come on, have some answers. Type it in the chat box. So I will take down some answers now. So Kritika has given me that direct taxes, we cannot shift the burden of tax. In indirect tax, we shift the burden of tax. Exactly what Mohammed also tried to say, right? Uh, so Ashna gave me an example. The direct taxes example is like income tax. Indirect tax example is just like GST in India, but we don't have any GST in UK. So considering that we are studying UK taxes, I will be using the term VAT. Okay. Deepika says the direct tax is the tax which is directly implied on the taxpayer, whereas indirect tax is paid by someone else on behalf of the taxpayer. Wonderful and crystal clear definition. Very good. So let's just summarize it. Let's take an example. What is an income tax? Suppose if I am, not suppose, I am a self-employed professional. So I have my own profits and gains from my business. Who is earning this profit and gains? I am earning. Okay. Who is paying taxes on it? I am paying taxes. Who is depositing it to the government? I am paying it to the government. So all the activities are done by me. It is an income charge it is a tax charge directly on my income, right? Directly on what I'm earning, tax is charged on it. That's called as your income tax, and that's a direct tax. I hope I'm clear for it. The tax is charged directly on my income, paid by me and deposited by me as well. Fine. Okay, now let's have other example also. Now let's take the other example of indirect tax. So what is an indirect tax? What happens in indirect tax? Let's take an example of VAT. So what happens in VAT? Suppose you go to the market and you want to buy a product. When you go to the market and buy the product, you are a buyer, you pay for it, right? You are paying for it. At the same time that you are paying for the product cost, you're also paying for the taxes that have applied on the product. So total amount you pay to the shopkeeper. And then shopkeeper collects the tax and deposits it to the government. So what happened here? First, the tax was not directly on any income. The tax was charged on goods and services supplied. Now what happened here? Tax is collected. Tax is collected by shopkeeper, paid by the buyer, deposited by the shopkeeper. So here the tax is getting passed on to somebody else. Correct? This is called as indirect tax. I will take one small example of a particular direct tax that many people think it is an indirect tax. I'll take that example as well, but just keep listening to me. So the tax charged on income, chargeable gains, wealth, for example, is a direct tax. Taxes are collected directly from the taxpayer and deposited to the government. For example, income tax, NIC, IHT, and chargeable gains tax. Okay. NIC, I've already told you. IHT is inheritance tax. That is a tax basically on your wealth. Okay. On the gifts that are made on death and all. So we'll be covering those. Now, indirect tax is a tax charged on goods and services. Tax is paid by the customer or I'll not say customer. I'll say tax is paid by the buyer, to keep it simple. Tax is paid by the buyer and is collected and deposited to HMRC by seller or the service provider. Now that comes the terminology, ma'am. What is HMRC? I'll be covering them. Don't worry. Just in some time, I'll be covering it. So indirect tax example is VAT. I hope you guys are absolutely crystal clear on it. Any doubts, any questions, ask me. I was coming to a point that many people think that TDS in UK terminology we call as payee. What is payee? Pay is pay as you earn. P for pay, A for as, Y for you, and E for earn. So pay as you earn. This is called in UK. In India we call it as TDS. So many people say, ma'am, TDS is deducted by the employer and on our income and deposited by the employer. So ideally it's an indirect tax. I say no, it is not an indirect tax. It's a direct tax. I will be giving a reason. Can some of you also think why pay is not an indirect tax and why it is a direct tax? Can you give me that answer in the chat box? Let's have thinking done. Type it, guys. I really don't want silently sitting students. Come on, participate. Jose, some answers. Monica, Hiral, don't be afraid whether you'll be wrong or right. I'm not here to judge you. Okay, right now. I would tell you when you're wrong or right after we're doing some questions. But right now, I really want you all to speak, be comfortable in sharing so that you have better answering skills in the exam. Okay, so Mohammed says that it's dependent on the salary of the employee. Wonderful. It is directly charged on income. Kritika says. Deepika is saying because pay is deducted from our income that we have earned. Wonderful. Now, you may find this question to be a very easy question, no? But it has been asked in your 2 marks MCQ also in the exam. Select from the following, please select which is a direct tax. Pay was an option where some students did wrong and they selected pay as an indirect tax. All of you are correct. Very good. Yeah, there are no goods and services also involved in TDS. Very, very well pointed out, Hiru. Very good. So it is why the major reason why TDS, or we will not use the term TDS now henceforth. Let's be in the UK tax environment. So let's talk about pay. So why pay is not an indirect tax, as all of you said, it's not on goods and services. There is no tax which is getting passed on. It is basically the tax on employees' income. It is just that collection and deposition is by the employer, but the benefit employer is only getting, no? Employee gets a tax credit for the same. So it's precisely a tax on employees' income. Okay, so therefore it is called as a direct tax. Wonderfully put up. Very good. Okay, now I'll first give you an example of what do we mean by, what do we mean by HMRC and who is the income tax authority of UK. Now, if you know, UK is a very, it's a monarch-based economy where we have monarchical, monarchy system still applicable. We have queen, king in UK. So though the queen is no more now we have king, but for a longer period, the UK was ruled by queens, right? So therefore, the term is Her Majesty Revenue Services or Revenue Corporation. Okay, so Her Majesty Revenue and Customs, we say. HMS for Her Majesty, okay, referring to the Queen. So Her Majesty Revenue and Customs is the name for the Income Tax Department of UK. In India, we call it as IT Department. In UK, we call it as HMRC. Okay, and in India, we call as IT officers, income tax officers. In UK, we call them the HMRC, or we call them Officers of Revenues and Customs. Okay, so Officers of Revenue and Customs is the terminology that we use for the staff in the UK, the IT officers, and the department is known as HMRC. That's all. Functioning is almost the same. Clear? Let's go in the detail of this chapter now. I gave you an introduction about the tax system, tax structure, the tax, the definitions, the different type of taxes. Now let's take the topics one by one from here. We're not going to be doing a reading of the chapter. We're going to understand the chapter. So your basic homework every day would be to read thoroughly the chapter that we have done in the class, so that if there is any scope of any doubts or any ambiguity, that is cleared there only. If you still carry a doubt when you read the chapter at home, please mark it and ask me in the next session. Okay, so that it's cleared. Now, let's just look at few very, simple points. Number one, this is more of MCQs, that what are the decisions or what are the factors that affect the government's tax policies? One very basic factor, economic factor. Why? Because every government wants to thrive its economy. Okay, so generally they would encourage donations to be made, savings to be done, right? They would encourage the businesses to start up, to bring more funds for the company, for the country, more taxes, investments to be done. Generally, they would discourage smoking, alcohol, more of motoring, because more CO2 emissions will go in the environment. So it's got a combination of social factors, your environmental factors, as well as economic factors, because we need funds, for everything, for development of the company, for securing a defense systems, for having the funds for exigencies, all that we need funds. So where the major of the funds come for the government, it is through the taxes. So the more services, the more industries, the more entrepreneurships, the more companies, the more work, employment that a country has, will have more taxes. Okay, so therefore it is the core for any business activity or any economic activity of the country. Second is a social factor. Now I've given you that example that to see its after all effects, the effects of these factors on the society as a whole. So this is the reason why you will find on the necessities like milk, bread, you will find no taxes applicable. While on the luxurious items like luxurious hotels, restaurants, the more richer the person is, okay, the items like alcohol, cigarettes, and all, you'll find more taxes applicable on it. Because the country aims is the ones who are poor or they don't earn more, you'll have lower taxes for them, or in fact, nil taxes. And the ones who are rich, please tax them more. Okay, environmental factors also we have discussed. Now we have various environmental taxes, like pollution taxes are also there, climate taxes are there, landfill taxes are there. Landfill is when you do a mining activity, that land becomes, not fit for cropping or agriculture purposes. So in order to make it fit for agriculture purposes, when the company removes its mining equipment, it has to fill the land and make it as it was earlier, level land, so that it can be fit for agriculture purposes. So this is why we live here, landfill tax. Now here you can see the reference is given, the chapter 1, section 1 of the essential reading for more details for the purpose of taxation. I really want you all to visit when you'll be reading this chapter. I am covering it all orally. Okay, but when you're visiting the chapter, reading the chapter, please read parallelly your essential reading also. Okay, now the structure of UK taxes and appeals. I've told you the structure. You're clear about it. Appeals is the same thing. Okay, one more point I'll cover here. The Crown Prosecution Service, we call it as CPS. It provides the legal advices, okay, and it conducts the criminal investigations in England and Wales, which are the areas of HMRC. HMRC governs England as well as Wales, because if you know, UK was a big kingdom, and there are some still countries which are still part of that kingdom. Though now many countries are individually operating and they're not no longer under the direct rule of the monarchy. Okay. Anyways, that's not there in your syllabus. You are just everything which is given to you would be given with respect to UK in the exam. So you really don't have to worry for the different countries, their names, areas, nothing like this. Next topic is appeals. Now, HMRC has given a decision that the taxpayer has to pay this much taxes. Taxpayer is not satisfied. He believes that no, his tax liability is not so much. So where would he go? He will appeal. He will do appeal against that order. Generally, what is the way to appeal? I'll give you guideline. Number one, the appeal first when it is made, that is generally, towards the same decision will be now cross-checked or looked upon by another officer in HMRC. So that's a peer reviewing. Peer reviewing is where suppose at the officer A passed the order of paying taxes of 10,000. You're not satisfied with that order when you appeal against it. First step is always the decision to be reviewed by officer B. If you are satisfied with the decision of officer B, story ends there and chapter is closed. If you're not satisfied, then you go to the lower tier tribunals, upper tier tribunals, high courts, supreme courts, and so on. Okay. So therefore we say that appeals will be first made to HMRC. This is generally in the case of income tax. When we talk about VAT, in VAT cases, appeals will be made directly to the appellate tribunals, lower tier, the first tier and the second tier tribunals, or we call them upper tier tribunals. Generally, the first tier tribunal is the first step for almost all cases, but the cases which have large amount of taxes, more complexity, or which are, referred by the first tier tribunal or against the decision of first tier tribunal, they will go to upper tier tribunal. So, like I told you, before an appeal is heard by the tax tribunal, there is an option for the taxpayer to request an internal review of a decision by HMRC review officer. So, internal review, or we call it peer review, is also possible at the option, which is generally availed by the taxpayers. Now, you know about the two type of taxes. Again, one more category of taxes is revenue and capital tax. So, simply speaking, the taxes which are charged on the income, they are revenue taxes. The taxes which are charged on the capital gains or the wealth of the taxpayer are the capital taxes. Revenue taxes are like income tax, NICs, which are charged on the income tax, on the income. Capital taxes are like your capital gain tax, inheritance tax, which are charged on capital gains or on wealth. Okay, so income tax and NIC are revenue, capital gain tax and inheritance tax are capital. Corporation tax is both, because when you see the topic and chapter, you will understand that corporation tax is the only tax which is charged on both revenue and capital items. It doesn't differentiate. It's a revenue income or capital income. All income added together, you'll directly put one tax rate of 19% and the tax will be charged on that income. VAT is not revenue, not capital, because it is charged basically by the end customer. Okay. Okay, now comes the very, very important point, the base of your chapter. Do you know what is a tax year of UK? What tax year is followed in UK? Anybody has any idea? Okay. Okay. Do you know what is a financial year? When does it start and when does it end? Put it in the chat box. Yes. No, Hiril, January to December is a calendar year. Okay. January to December. From 1st January to 31st December, we call it as a calendar year because calendar starts with January, ends with December. Financial year always starts with 1st of April and ends on 31st of March. Very good. Yes, Deepika, Ashna, Monica, correct. So all of you gave me a correct answer. Mohammed and Hiril gave me the correct answer for calendar year. And Monica, Ashna, and Deepika gave me the correct answer for financial year. So let's just go into the understanding. Financial year starts from 1st April. Like for example, you have given for 21-22. So financial year will start on 1st April 21, will end on 31st March 22. Calendar year will start on 1st January 21, will end on 31st December 21 only, the same year, correct? You can have other years also, like randomly, I want to start my year with July, I can. I want to start my year on Diwali, I really want to start my year on September, October, any month, there is no problem. When I'm doing my business, I'm preparing my accounting records, I can, have my accounting years. We call them accounting year. Accounting year means the period for which, the year for which you are preparing your accounting records because you're doing business. So that accounting years can start from any day, can end on any day, no problems. Like for example, I've taken randomly 1st July to 30th June 22. I can take it. Now comes the question tax year. Tax year in UK starts on 6th of April, ends on 5th of April. Very absurd date, but yes, it is this. Okay. No, 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 no. There are countries, they don't have January to December as the financial year. I'm coming. I'm coming. There are countries. See, it's a universal financial year is 1st April to 31st March. Some countries may have taken their tax year as December to March, January to December. Got it? Like in our country, if I talk about India, for India, the tax year is from April to March. So tax year and financial year is the same thing. What is a financial year? Financial year is basically universally, suppose we are doing business, then universally, what is the common year that will be there for all the countries in the world? Because universally, we follow one common period of 1st April to 31st March. However, it is not compulsory to follow. Got it? Are you clear now? Now, accounting year means I want to prepare my accounts. I want to start my business on 1st December. Then I'll prepare my accounts from 1st December to November. Accounts means those accounting, balance sheet, P&L that you are preparing. So there's no compulsion. There are people in India who follow Diwali as the auspicious period. So they start on the day of Diwali, they end on the day before Diwali. That's okay. Are you clear now? Kritika, are you clear now? Hiral, are you clear now? Hiral, are you clear? Please revert in the chat box. Okay. Now I come to UK tax year. So in UK, when we are preparing the tax returns, when we are doing the calculations, keep listening to me for a minute, okay? You will be having the tax year that we are going to write in an answer would be starting from 6th April of, for example, 2021 will end on 5th April 2022. Okay, now how to read the tax years? So let's have an example. Suppose if I say my year starting on 6th April 23 and it is ending on 5th April 24. What is the tax year? 23, 24. These 2 years are getting here. Again, if it is 6th April 24, my year is starting, it will end on 5th April 25. So the tax year, I will call it as 24, 25. Now you will say, ma'am, so when we are doing calculations for income, will we do it for like 6 days in one period and 25 days in the other period? Will we do it like this? No. For calculation purposes, okay, for the calculation purposes, we will be calculating assuming the period is from 1st April to 31st March. What does this mean? This means that suppose I am taking 23-24 calculation. Here I will take full April month. And for the ending period, I will take till 31st March only. So I'll not take here 24 days and 25 days and here I'll take 5 days. No. I will take full 30 days here. So you will always do calculations round off in month. In your tax calculations, we will never do round off in days. We will always do round off in months. Okay? So everywhere in your taxes, you will always do monthly calculations and not days calculation. I repeat, if my period is starting on 6th April 23 and ending on 5th April 24, I will take my, taxable, suppose the income calculation, if I'm doing for employment income, that is salary income, I'll take salary for the month of April 23, so on till 31st March 24. This, however, when you're writing tax year, you will never write 1st April, 31st March. Only for calculations, we do that. But the tax year wise, I will always take 6th April to 5th April only. Anyone who's got doubts, queries here, please put up in the chat box. Anyone? Let's have an example. So come on, some quick questions. You have to tell me the tax year. So I'm putting on some random questions. Just allow me time. I'm writing these questions here and one by one, I'll ask you all to give me the answer. So I'll call your name and then you will give me your answer. Okay? Don't write down like that randomly. Only 4 questions I'm going to put. I'm just asking 4 students right now. We'll have more questions to ask. Okay, Jose, can I have your answer for the first one? What is the tax year? What is the tax year for the first case? Type it in the chat box. Okay. I'm not discussing the answers. I'm just writing your answer. Monica, second question. Elaborate it. If I say the tax year is 21, 22, when it will start, when it will end? Monica, quick. Okay. Monica has given me the answer. I'll just type it down. Ashna, give me the next one. Type it in the chat box, elaborate it. I'm not discussing any answer. Elaborate the next one, Ashna, quickly. 2021. I'll type it your answer. Okay, and the last one. Omer, give me the answer. Which tax year it is? Okay. Now let's see whether you were correct or wrong. Without highlighting it, let's just understand. If there is an error, let's correct it so that we are correct at the first pass. Okay, just a moment. So, okay, so the first answer is this correct? No, it is not correct. Why it is wrong? The year is 22. First, it is starting in 22. It is ending in 23. So for the correct, for us, the tax year is not 23-24. It is 22-23. Are we clear? Because it is starting in 22. It is ending in 23. Geos, are you clear? Just revert quickly, yes or no. Are you clear now? Okay, anyone who's still not clear, please put up in the chat box. Now coming to the next one. The year starts on 6th April and will end on 5th April. Because when I'm starting the year today, my year will end on just the previous day. So if today is 9th March, if it is starting, my year will end on 8th March the next year. Exactly, then only we'll have 365 days, right? So going by the same logic, if my year is starting on 6th April 21, it will end on 5th April 22, not March. Are you clear with this? Ashna? No, not Ashna. Monica, are you clear? Now, the next one, 2021, 6th April 20, 5th April 21, correct. Good. 6th April 21, 5th April 22, what is the tax year? 21, 22, correct. Very good. Okay, any doubts? And don't worry, you don't have to write anything. I'll be sharing these Excels after the class in the group. Okay, so you can always just follow them. Okay, now moving forward. Okay, I hope we are clear so far with everything that we have covered. Any doubts, any questions? I'm repeating it again. Ask me. So here I've given you the definition of revenue tax as well as the capital tax. Okay, now you know absolutely what is a tax year, what is an accounting year, what is a financial year. Now I come to the next topic. So far, I hope everybody is comfortable. Now, I take the next topic, tax avoidance and tax evasion. Before I explain you this, I'm going to be playing a small video for the same. Sometimes we play videos, sometimes I explain like that, sometimes I just share some other material as well. Okay.
Tax authority. Some examples of this come from fines to time in prison, rent produced or shared time, etc. Negative consequences whatsoever. When you buy something or you'll
Okay, so I'm just playing this video. Yeah. Yes, Ashna. So in Ashna, for the tax year, I mean, it has got all different years. Tax year is 6th April to 5th April. Financial year is running from 1st April to 31st March. Accounting year can be as per the decision of the business person. That what accounting year is he interested in keeping, he can keep that. In India, we have financial year and tax year coinciding. They're the same. Okay, I'm sharing the screen. Let's have a quick understanding. It's a good video on tax avoidance and tax evasion.
Every single time you buy something,
I hope it is completely audible. Everybody is able to hear it. Great.
or you're paid by your employer, a big chunk of the money will go to the taxman. Big corporations around the world pay millions every year in taxes, and so it doesn't come as a surprise that some people find ways of not paying it. In today's video, we will be taking a look at the difference between tax avoidance and tax evasion. Hello and welcome to another KYC Lookup video where we bring you AML related content to help you pay taxes. As begrudging as it may seem, we all need to pay taxes as it goes towards building our infrastructure, supporting our emergency services, as well as supporting our local libraries and parks, education, the welfare system, as well as housing. If you're in the UK, it also goes towards the NHS, which is also known as the National Health Service. It basically goes to all the things that are important to keep society going. However, over the years, there has been some big stories of high-profile people trying to avoid doing this. Before diving into some of those stories, let's discuss the difference between tax avoidance and tax evasion. What is tax avoidance? In technical terms, tax avoidance means legally reducing your taxable income. For example, claiming allowed tax deductions and tax credits are common tactics, as it's invested in tax-advantaged accounts such as IRAs, individual retirement accounts, and if you're in the US, 401ks. In simple terms, you are structuring your affairs so that you pay the least amount of tax due. So even though it is not illegal, it may be seen as immoral, as you are not paying your fair share. In a recent US report, it states that Americans deducted over $200 billion of charitable contributions a year on their tax returns, according to the IRS data. Most of these contributions were in cash, but tax professionals say you don't have to give dollars to give a big deduction. Donating household goods, food, clothing, and other items can put a big dent in your tax bill too. Examples of tax avoidance could be donating to charitable organisations, investing in your retirement funds like IRAs or 401ks, communicating with a tax advisor on how to minimise your tax bill legally, and investing in tax relief companies. So what is tax evasion? Tax evasion is the use of illegal methods of concealing income or information from the IRS or other tax authorities. Tax evasion can result in fines, penalties, and/or prison time. In basic terms, tax evasion is lying on your income tax form or any other form which makes it seem your income is a lot less than it actually is. Tax evasion has moved on considerably and is no longer conducted down dark alleys with bags full of cash or fists full of dollars slipped quietly under the table and has become more sophisticated. For example, tax evasion could be conducted by banking in on cryptocurrencies and not declaring them. The IRS have rules in place about declaring these types of currencies, as they are taxable, and if you do not declare them, you are breaking the law. Paying an employee in cash and not declaring it to the IRS or payroll. Any form of illegal activity which you are benefiting from financially is evading tax, so even when dealing in drugs or any form of prostitution, you can still be taxed upon it if declared. Not reporting any income from an all-cash business. A real-life story of tax avoidance comes from the big tech company Google, who in 2016 was accused of using two loopholes which allowed them to pay just 6% in corporation tax instead of the required 19.3%. In the same year, Apple was ordered to pay $15.9 billion in back taxes after it was revealed that the company paid just 1% of the tax on its European profits. And there was much uproar from many politicians in the UK to boycott Amazon, when it was revealed they paid a measly £4.2 million in tax sales on £4.3 billion in profit. They did this by funneling payments made in the EU through its subsidiary based in Luxembourg. An American high-profile case for tax evasion comes from Republican Congressman Michael Grimm, who pleaded guilty to tax evasion through one of his restaurants. He admitted to evading tax to the total amount of $1 million by paying employees in cash and not declaring it. He was found guilty of this charge and was sentenced to 8 months in prison. So to recap, tax avoidance is the use of legal methods to reduce taxable income or tax owed. Tax evasion is the use of illegal methods of concealing income or information from the local tax authorities. Well, there.
So I hope it gave you an idea and also an understanding that tax evasion is not something which you feel that it is not taking place. It is taking place all throughout the world because everyone, generally looks into the ways to avoid taxes or to evade taxes. Okay. So basically, just give you a brief up about what is the difference between tax avoidance. IRS, this example, I wanted to play this video because it had good examples in Google, Apple, and other cases. IRS is the, You can say the tax department of US. So just like in UK, we call it as HMRC, in US, we call it as IRS, sorry. Okay. Now, just keep listening to me. So tax avoidance is when you want to pay taxes less, but through legal means. Okay, by looking into the various provisions and the benefits given by the tax authorities. Like, for example, if in India, what do? We generally contribute to ATC under the old tax regime, and we do investments, lot of investments we do in certain places. The purpose is, if we do those investments, my taxability will reduce. So likewise in UK, what happens, it says that if you are making investments, for example, you don't have to pay the capital gain tax or the chargeable gain tax if you want to, just buy a replacement item and you can just roll it over to a future period. Or, for example, if you are in contributing to a special savings accounts, which I'll cover, the ISAs, individual savings accounts, there'll be no taxability applicable on it. If you invest in national savings certificates, national savings accounts, there's no taxability on it. One of them is taxable, one is exempt. Okay, likewise, so every tax rules in every country give you some options by which, if you make certain investments or if you contribute to certain funds, you will get the benefits of paying lower taxes. Okay, so we are using the ways to reduce our tax liabilities by following the legal ways. It's a hot favorite topic for your exam, for MCQ especially. So there is a term called tax planning. Tax planning and avoidance, they go hand in hand. Because what is planning? Planning is a reduction in the overall tax liabilities of the companies or the individuals. So in a way that, we can claim it with the help of allowances. Like, for example, we have depreciation accounts. In income tax, in UK, we have a term called capital allowances. Hi, Madhavi. Good morning. So we are covering tax avoidance and tax evasion. Okay. So you can just join in from here. I hope so. I have come clear. So what we are doing precisely, whether it's tax planning or tax avoidance, we are finding out ways to reduce our tax liability through the legal means, the means which are allowed by the income tax authorities. Now comes tax evasion. So I'll take an example of these Satyam authorities. The Satyam technologies, long time back, it did tax evasion. It had hidden a lot of information from the income tax authorities, which led to paying lower taxes. So it did tax evasion. There are various companies throughout the world, some very famous companies. Okay, and other than that also, that have resorted to tax evasions. Evasion means they are deliberately, sometimes they're concealing information, they're hiding. So for example, you go to a tax planner and says that, boss, I really want to reduce my tax liability. Or if I say, for that matter, you become ACCA and people come to you and say, I really want to reduce my tax liability. So one way you offer is, okay, you have three income: employment income, interest income, and property income. And you say that, don't show interest income. Who sees it? No. HMRC won't have time in the world to see whether you have shown your interest income or not. So you are suggesting your client to hide the interest income, to conceal it. Don't show it. Don't share it with the, tax authorities. So is this the correct way when you're telling the individual to not show the tax in the income to the tax authorities? Even if it is pound one, even if it is pound 10, pound 100, pound 1000, value doesn't matter. But even if you're consuming £1, that's wrong, because you are not, as a professional, you should not guide your clients to conceal income. Concealing income means, if I'm showing less income, definitely I'll pay less taxes, but it is not the legal way. It is the illegal way. So this is what we call as tax evasion. Tax evasion means your aim, what you are trying to do is misleading the HMRC by either suppressing the information or you're giving deliberately false information. Like, for example, many people in India also do. They have not done investments in ATC, but they show in the tax return investment of 1 lakh in ATC. You have not done any investments. It's a false information that you're providing. So this tax evasions, which are generally caught by the tax authorities, they lead to in fact paying more taxes along with penalties and interest. And if the tax evasion amount is too huge, and if it is some other criteria are also attached, there can be imprisonment and final fine also. Right. So yes, there are cases that takes place. This is tax evasion and tax avoidance. So tax avoidance and tax planning, they go hand in hand. Okay, they are almost one and the same thing. Okay, any questions so far? So I'll just take up this point. Tax planning and avoidance, I'll take it together. They are the ways to reduce the tax liability of the taxpayer by means of legal ways in accordance with the tax legislations. Tax evasion is the illegal ways adopted to reduce the tax liability of a taxpayer by misleading HMRC with false information or suppressing the information. That is, you're showing less information. For example, the income is 10 lakhs, but you're just showing it as 6 lakhs. So that's suppressing the information. Clear? I hope, Madhavi, were you able to understand since you've just joined now? Okay, that's great. Now, let's take a quick question and then we go on to the further understanding of this topic. Okay, let's have I'll tell you one more point and then we'll be able to do this question. I'll play a small video on this GAR, General Anti-Abuse Rules. They are related to your tax avoidance, tax evasion only. Okay, that's more towards tax evasion. So I'll just play that video and then we'll discuss this last two topics of this chapter. Please focus on the screen.
Can you help me? I've received a topic in class today for preparing project on GAR which has to be presented tomorrow before the panelist faculty members. What is GAR? Is there any specific provision about GAR in Income Tax Act? Is it so useful from the perspective of the taxpayers? What resources should I look into for researching on this given topic?
Not to worry, chap. You'll be glad to know that TILTube has uploaded an educational video. You'll also realize Taxation rules, or GAR, as the name suggests, is anti.
The full form is General Anti-Avoidance Rules. Okay. And whether it's UK taxes, Indian taxes, US taxes, anywhere in the world, every tax, rules have these GARs in place.
To any method used to avoid or prevent the applicability of tax on transactions specifically used to put cloak on the net income chargeable to income tax. Globally, tax avoidance has been recognized as an area of concern, and many countries have expressed their concern over tax evasion and avoidance. This is also evident from the fact that either nations are drafting a new provision of general anti-avoidance regulations in their tax code or empowering their existing code for future contingencies. With the increasing trends of integration of economy and repetitive growth in cross-border transactions, legislature of some countries have empowered their revenue departments to disallow tax benefit
if the assessee fails to establish the commercial legitimacy of transaction in question. In context of India, the much hyped Direct Tax Code 2010 promised to address the need for removing the fences by legislating GAR in addition to already existing ASAR, and when it has been proved by the Apex Court in its recent ruling of Vodafone case that India has a judicial anti-avoidance history. It empowers officials to deny the tax benefits on transactions or arrangements which do not have any commercial substance or consideration other than achieving tax benefit. It contains a provision allowing the government to retroactively tax overseas deals involving local assets. GAR could also give powers to the tax department to deny double taxation treaty benefits to foreign funds based out of tax havens like Mauritius. The expression tax avoidance is used to describe every attempt by legal means to prevent or reduce tax liability which would be otherwise incurred by taking advantage of some provision or lack of provision in law. Tax planning may be legitimate provided it is within the framework of law. Colorable devices cannot be part of tax planning. Thus, tax avoidance could be said to transact between substance over form of a transaction. OECD leaves it to the individual countries to introduce and
this portion we don't need to understand. I hope you got an idea of the general anti-avoidance rules. These are the rules intact with the income tax departments, basically to secure them against those tax evasions and the avoidance
abuse legislation.
So I'll just take that portion from the chapter, and if there is any query, ask me in the chat. Just give me 10 minutes. Once we complete these two topics, we're done with this chapter. I'll give you a break. Okay, and then only we'll begin with the next chapter. So now there are general anti-abuse rules, or we call them, earlier the name was anti-avoidance rules. Now we call them anti-abuse rules. So basically, these are rules set in place to help HMRC, okay, to counteract the tax advantages for abusive tax arrangements. That is, when the assessees, they take care, they take the help of the evasion rules. They're taking the help of these evasion means. So then how HMRC can safeguard themselves? We have these rules in place, anti-abuse rules, okay? So now the main purpose why the taxpayers, they go into that abusive arrangements or the arrangements which are not considered legal from HMRC point of view is basically to get tax advantages. Okay, arrangements are only termed as abusive if they cannot be regarded as a reasonable course of action, as I told you. Like the purpose is to have significantly less income, profits or gains being taxable, but they are not through avoidance ways, through evasion ways. So tax advantage includes maybe a relief from paying taxes, reduction in paying taxes, you get a repayment of tax, that's a refund, you're deferring the tax, that is the tax will be paid at a future date, but through wrong means. So in any ways, which is, giving the taxpayer an advantage of paying either lower taxes, nil taxes, future taxes, getting a refund. So in this way, but which is by illegal means, which is not by the correct means. For those actions, HMRC has to have some safeguards in place, that is general anti-abuse rules. Okay, so now it gives powers to HMRC that how it can counteract these tax advantages. Like for example, HMRC can increase the taxpayer's tax liability if it finds anything to be suspicious. In India also we have this where we get notices from the department. So yes, it can take place. Okay, now reporting the suspicions. Last portion, but one of the most crucial portions for your exam, especially section B, section C, both are captured for this topic. Okay, now what is this reporting suspicions? Reporting suspicions means that suppose as a professional, as a ACCA, you're governed by the code of ethics. Okay, now you have found something which is suspicious. So ACCAs are always expected, as they're governed by the code of ethics, that they're always using their professional judgment and they're always upholding the standards of ACCA. Okay, that means you're always taking it higher. So if you find that your clients, the taxpayers, they are dealing with HMRCs and there are reasons when as a professional, you have a reasons to believe the taxpayer has not declared his full income, has concealed his income, or he's not been honest with HMRC. So now in that case, what should be your course of action if he's your client? Should you continue to work for him or you should not? So there are some steps given by HMRC which are to be followed. In fact, they're not given by HMRC, they're suggested by ACCA, which are to be followed compulsory in the same sequence. So what are the sequence of steps? Let's understand them. In case of tax evasion by a client, the duty of the practicing accountant who is ACCA is to follow the following steps in the same order. First step, take steps to persuade the client to correct the material error or disclose full information of the income in the returns to HMRC. The first step is you're going to persuade the client. You have to tell the client that, look, please disclose full information, give full details, whatever you have hidden, please reveal it to HMRC. You give details. You are never going to give details to HMRC directly. No, you cannot. Because there's a confidentiality that happens between the client and the practitioner. So that should not be broken. You cannot directly approach HMRC. You will persuade the client that he will give this information in returns to HMRC in the income tax returns. Second step, if the client does not undertake the advice of the professional as suggested in step 1, then ACCA will not approach HMRC. Then the ACCA should refrain from acting for the client and should stop working for him. So it's like you try to persuade the client is not listening, he's not agreeing, and he does not undertake the advice that is given by the ACCA professional. Then in any case, you cannot directly approach HMRC. You will never ever approach HMRC directly and say that, look, HMRC is revealing, is concealing this information. No, you are bound by that confidentiality rule. So instead, what you will do, you will refrain from acting for the client. You will step down as their practitioner. You will no longer work for the client. Third step, the professional then would inform HMRC the cessation of his duty with the client, but very important, without disclosing the reason for the same to HMRC. Once you have stepped down, because when we prepare the returns for the client, if it is practitioner is there, the name of the practitioner, the details of membership, everything is given over there because he has to sign those balance sheets in the returns. But once you step down, you will have to inform HMRC. So third step is you will inform HMRC about the cessation of the duties, the work that you are ceasing to work for that particular client. But you will never reveal the reason that is why you are stepping down. That reason is not to be revealed. Just revealing of the fact that you're no longer working as a professional for that client. Okay, so I'll just repeat the first 3 steps. The first step is take steps to persuade the client to correct the material error or disclose full information of the income in the returns to HMRC. If the client does not undertake the advice of the professional as suggested in step 1, then the ACCA should refrain for acting for the client and should stop working for him. The third step, the professional should inform HMRC about the cessation of his duty with the client without disclosing the reason for the same to HMRC. Fourth step, if you find that the client is still not, done those changes, now what you will do, a money laundering report will compulsory be prepared by the professional and submitted to his firm's money laundering officer of the accounting firm. Suppose now you are a professional and you are a part of an accounting firm. So as per the UK rules, every accounting firm should have a money laundering officer whose duty is that the clients who is having that money laundering activities done, professionals will prepare a report and give it to their firm's money laundering officer. And that money laundering officer will then, look into the report, sign it, and add details, whatever is needed, and then will submit it to the National Crime Agency. And then National Crime Agency will take actions on the client. But we can never directly write to HMRC at all. Okay, so I quickly repeat the fourth step. The fourth step is a money laundering report will be compulsory be prepared by the tax professional and submitted to his firm's money laundering officer. Or if the professional is a sole practitioner and he does not have any money laundering officer in his firm, then he will submit his report directly to the Crime Investigation Authority of the country. He will never submit it to HMRC, but to Crime Investigation Authority that we call as CIA of the country. Okay, if the report is not submitted, then the professional can be charged for criminal offense for tipping off. Or if he shares this report, or if he shares his report with the client, then the professional will be charged with the criminal offense of tipping off, that you tipped off the client, you made him aware of it. Okay, so I'll just take the last step. The accountant must not disclose to the client or to a third party that a money laundering report has been made. So I'll not write. No. If he shares his report, if it discloses about the report, money laundering report, to the client or the third party, any third party, then the professional will be charged for tipping off. Makes sense, no? That you have already informed the client, so is well aware. Now he'll keep himself secured, and there will be no use of raids by the CI. So please understand the 4 steps in sequence. Number 1, you have to persuade the client so that he will reveal his all details honestly to HMRC. Number 2, refrain to act for the client. Number 3, inform HMRC of cessation without giving the reasons. Number 4, prepare a money laundering report and submit to the firm's money laundering officer. And then money laundering officer will submit it to the National Crime Agency. If it's a sole practitioner, submit it to the National Crime Agency directly. However, if there is any information leaked about the report to the client or a third party, then the practitioner can be charged with the criminal offense of tipping off. Clear? Any doubts till this, please put up in the chat box. Anyone who's got any doubts in this so far, any topics, any questions of this chapter? Then let's do one question. Tax avoidance and tax evasion. The following acts have been committed in the course of business by one of your clients. Action 1. A customer invoice was omitted. Omitted means removed. Was omitted from accounting records in order to push it into the taxable profits of the following tax year. Okay. So we did not take it in the current tax year. We omitted it and we took it in the next tax year. Oh, sorry. The second is action number 2. The client decided to gift an asset to their spouse in order to reduce a capital gain tax liability. Now, as per the taxes rules, the transfers between spouses is exempt as per the tax rules. Okay. Now you tell me which of these actions is amounting to tax evasion. Action 1 only, action 2 only, both actions, neither of the actions. Which option is correct? A, B, C, D. Mohammed, Deepika, Kritika answered. Rest everyone. Ashna answered. Hiral, Jose answer. Madhavi answer. Okay, so let's discuss the answers. Yeah, I'll show you the action one again. Okay, now we have answers. So Kritika, Deepika, and Mohammed says action 1. Ashna says neither of them. Jose action 1. Madhavi action 2. And Hiral says action 1. Boss, action 1 is tax evasion. Why do you think that neither of them is tax evasion? Let's read it through. A customer invoice was omitted. That means we had made sales in the year. I omitted it deliberately. Why am I omitting it? So that I will take it in the sales of the next year. That maybe I'm expecting lower sales in the next year. So this will helping reduce profits. Reduce profits means reduce taxes. So we are suppressing the information. Very good, Hiral. Are you clear with this? Madhvi, are you clear? And Ashna, are you clear? So we are deliberately trying to suppress the information, no? So that I will not show this invoice. I will not show this sale. So I will pay lower taxes and in a way I will be saving my taxes. But this is not legally that we are doing, right? Because HMRC doesn't say you can omit invoices. Whatever you have earned in the year, you have to show that. Are you clear with this, Ashna? Please revert. That why D is wrong. So, okay, so Ashna is saying, ma'am, it's okay, no, that we are paying, no, we are not paying taxes in the current year, we are paying taxes in the next year. There's a rule that says whatever income that you have earned in the current year should be paid in the current year only. Then it is so easy for me to do, no? For example, Ashna, say this year, for example, if I have an income of 1 crore, and next year I am expecting myself not to be earning anything. So I will do one thing. I'll pay 50 lakhs income taxes in the current year and 50 lakhs in the next year. Can I do that? Is it legally allowed? No. When you are liable to pay, you have to pay. You don't have a choice. I can shift my income like this. No. If your income is due for the year, you have to pay it in the current year only. HMRC will not make a list that this is the income invoice of 10 years back. And now people will pay taxes on it after 10 years. You cannot do that, right? Are you clear with this, Ashna? Yeah, so Mohammed rightly said for accounts also we have a rule of matching principle. For taxes also. Now the second case, client decided to gift an asset to their spouse in order to reduce the capital gain tax liability. So Madhvi, like I said, the transfer of assets between one spouse to another is exempt. There is no taxability on it and it is legal. Why? HMRC allows that exemption. So here it is not tax evasion, it is tax planning. It is a tax avoidance. I want to avoid tax. I will transfer the asset to the spouse, and spouse will pay taxes on that income, if any, are generating from that asset. Are you now clear, all of you? Those who had doubt, that now, yes, the correct answer is action 1 only. Okay? Okay, I'll give you a break and then we'll cover just 2-3 points of this chapter. That's all. And then we move on to the next chapter. Okay, so let's have a break of 10 minutes. Every class will have a break after 2 hours of the session for 10 minutes. So right now it's 20:20. We resume at 12:30. Nobody will leave the class. Just stay there. I'll just keep my, audio video off. I'll just also take a break for 10 minutes and then we resume at 12:30. Okay, so we're not going to join or leave and join. You're going to stay there. Just it is a break so that you refresh yourself. Because 4 hours continuously, if you're studying, you may just feel tired. So just have a break and then we resume in 10 minutes. Okay. So 12:30, 31, we resume. Yeah, guys. So we are back and I again ask if there's any questions and queries till this point, please put it in the chat box and then we continue. Okay, then let's continue. Though it is not much in detail, but suppose if there is an income which is getting taxed in UK as well as in another country like India, then will we have to pay double taxes? No. Generally, the countries have the treaties made between them. It's called as double taxation avoidance agreements, TTAA. So based on these agreements, we decide and which country will have the share of taxes, to what extent, on what source of income. All these details are given. And this overseas income taxation is not covered in your skills level taxes. It is covered in your ATX, advanced taxes. Okay, so we'll cover it that time. So we're done with this chapter. Now, I'll just show you how you'll be proceeding ahead with your exam kit. So this is your exam kit that you have. So first part, suppose if I'm taking here, the first section is UK tax system and its administration. However, it is not just covering chapter 1. There are a cluster of chapters that are included here. I just need 2 minutes. Something has come up. Just 2 minutes. So here you will find the questions in place. This is the UK tax systems and administration. Okay. These are the questions in place you will find in your UK exam kit. Now we can also discuss some questions, though there's a mixed cluster. So I want you to first revise the syllabus. I'll give you questions and homework. Tomorrow we'll discuss them. Okay. So you just follow, these are where you can, the best part in your ebook, if you have, is you can select your answer then and there. Now, for example, if we do this question, which two of the following have legal force? Now, it's a revenue and customs brief, a statutory instrument, an act of parliament, or an extra statutory concession. Which two of the following have legal force? Now, suppose if I select, if I select an act of parliament and I select a statutory instrument and I submit. If it is correct in the ebook, you will get the answer then and there. It's correct and you will have an answer. If I select a wrong answer, for example, if I just select randomly this and it is incorrect, I'll have the correct answer with. So please, I'll give you questions on homework. You will try these questions and I suppose many of you don't have the books with you, right? So then in that case, we'll discuss these questions tomorrow in the class. And I'll send you, you all have books to read. You can just go through the chapter and or I'll share the screenshots for today. read it across, and then we carry over with the questions in the next class. Okay, now let's start with chapter 2. Chapter 2. So we have this. This chapter is about now where we are going to practically start calculating the taxable income and its income tax liability. So we'll be computing the taxable income, we'll be calculating the income tax liability. Okay. Now let me first, this chapter is very broad, so we're going to go step by step. Before we determine and we calculate the income tax liability, first step, we have to understand who's going to pay taxes. So we have different terminologies. Like you all are aware, there are people, we call them as citizens. So is a citizen of UK going to pay taxes? Or do we have any other terminology for income taxes? For income taxes, when we determine that who's going to pay taxes, we determine it with the guideline or with the rules of residency. Okay, so we apply the residency rules, and then we determine whether the individual is a resident or a non-resident. And accordingly, the taxability of income will take place. I said the term individuals. I did not use the term corporations. Why? For the corporations, the residential status, their taxability, we will take it later when we cover the corporations chapter. Okay. Right now, we'll be focusing on the individuals. So we'll be looking into the individual's residency test and their test that establish whether a person will be a resident or not. Because for income taxes, if a person is resident, if an individual is a resident, then the entire worldwide income will be subject to UK taxes. What does this mean? This means that for a UK resident, whether he's earning income in UK or India or Sri Lanka or US, entire his income will be put to UK tax. Of course, subject to the double taxation agreements that will be there. So there will not be a double taxes. We will get the benefit of the taxes paid, if any, in the overseas country. So that you will study in ATX. Okay, so first point is, if the person is declared a resident, his entire worldwide income will be subject to UK taxes. If an individual is not resident, we call him non-resident. So a non-resident individual will be only subject to UK taxes. That is, the taxes earned on his UK income. He'll be only subject to UK taxes. Clear? So now we know one thing. We know one thing, that a UK resident will be subject to his worldwide income, and a UK non-resident will be subject to only UK income and not worldwide income. How do we determine whether a person is a resident or not? Whether an individual is a resident or not, how do we determine that? In order to determine whether an individual is a resident or not, there are 3 tests which are there. We take the test in sequence. Okay. If first test declares that if the first test is cleared, for example, in the first test only, we come to know that the resident is a non-resident, that the individual is a non-resident, then we will stop there. We won't go to step number 2. Why? Let me first explain you the 3 tests. The first test is, does the individual satisfy the automatic overseas test, or we call it as non-UK residency test? The first test is automatic overseas test or non-UK residency test. Why we call it as automatic test? There are 3 conditions. If any of the if any of the 3 conditions is satisfied, then the person is declared as non-resident. The moment you know that in step 1, the individual is a non-resident, now you don't need to go to step 2 or step 3. Step 1 declares that the individual is a non-resident, non-UK resident. Okay, now you go to step 2. When you will go to step 2, when you are not having a conclusion by step 1, that none of the 3 conditions are getting satisfied. So now you go to step 2. Step 2 says there are again 3 conditions that will declare that the individual is an automatic UK resident or not. Why we call it as automatic UK resident? If the 3 conditions, any of the 3 conditions are satisfied, then the individual is an automatic UK resident. Okay? If again any of the 3 conditions is satisfied, now you know that the individual is an automatic UK resident, is declared a UK resident, then no need to go to step 3, you will stop there. However, if by step 1, none of the conditions are satisfied, step 2, none of the conditions are satisfied, then you go on to step 3, which is called as manual test, or we call them sufficient ties test, where you don't have clear-cut 3 conditions. You have some other conditions to be met, and only some criteria are also there. So we will go into that. Once you're meeting those criteria and conditions, only then it will be, the person will be declared a UK resident, otherwise UK non-resident. Let's go step by step. First step is, please check, does the individual satisfy any of the overseas test or non-UK residency test? That is, by satisfying any of these conditions, he would be declared an automatic UK non-resident. Okay, which are those conditions? There are 3 conditions. Let's see. The 3 conditions are, condition number 1, that is days spent in the UK are less than 16 days. And also one thing I just wanted to highlight, we always check residential status of the individual every tax year. So it may be the case that in the current tax year is a resident and in the next tax year is a non-resident. Pretty much, that's possible. Okay, so for every tax year, we will determine the residential status of an individual. So for example, we are determining the residential status of an individual for tax year 22-23 or 23-24. For tax year 23-24, we want to determine the residential status of an individual. Based on the data given, please see if any of the 3 conditions is getting met. First condition, days spent in the UK are less than 16 days. Okay, it has got no other condition. Just check in the current tax year 23-24, starting from 6th April 23, ending on 5th April 24. Is he spending only up to 15 days? Because less than 16 days we want. So is he spending less than 16 days in this tax year? If yes, condition is met, he is automatically UK non-resident for that tax year. If not, go to second condition. Second condition says he's spending less than 46 days in UK in that tax year. But along with that, there is an additional condition. That is, he's not a resident in the 3 previous tax years. So there are 2 conditions here. Number 1, he's spending less than 46 days in UK in that tax year. And along with that, he is not a resident in the previous 3 tax years. Condition number 3, he's spending in UK less than 91 days in that tax year. And he is working full-time overseas. Okay, I'll repeat these conditions. First condition is he's spending less than 16 days in that tax year in UK. If it is not getting met, go to condition number 2. He's spending less than 46 days in UK in that tax year, and along with that, he should be not resident, okay, non-resident. He should be a non-resident in the previous 3 tax years. Which are the previous 3 tax years? That means in 22-23, suppose if I'm taking the example, my current tax year is 22-23. So in the current tax year, he's spending less than 46 days. The previous 3 tax years are 21-22, 2021 and 19-20. In the previous 3 tax years, he is not a resident. If this entire picture is getting matched, only then condition number 2 is getting met. Condition number 3, he's spending less than 91 days in UK in the current tax year. And in the current tax year only, he's working full-time overseas. Overseas means anywhere outside UK, he's working overseas for as full-time, and he's spending less than 91 days in UK. If any of these 3 combinations are met, that is number 1, less than 16 days in UK, number 2, less than 46 days, and not a resident in the previous 3 tax years. Condition number 3, less than 91 days and working full-time overseas. If any of these 3 conditions are met, then he is a non-UK resident automatically for that tax year. Any one condition also out of these 3 is met, then he's a non-UK resident for that tax year. If none of these are met, go to step 2. Just like we had automatic UK overseas test, now we'll have automatic UK residency test. That is, if any of these 3 conditions are met, he's an automatically UK resident for that tax year. Okay, number 1, condition number 1. He's spending 183 days or more in that tax year. So if I'm talking about tax year 23-24, he's spending 190 days in that tax year in UK. So he's an automatic UK resident. Or if he's spending less than 183 days in that tax year, then you still have other 2 conditions to see. The second condition is the only home that he has is in UK. That means the only home that he has, he's the owner, the only home that he has is in UK. So he's got only one home in his name, and that is in UK. Number 3, he's working full-time in UK. Now, if you see in automatic residency test, there is no additional condition, only one condition. So first condition is spending 183 days or more in UK. The only home that he has is in UK, and he's working full-time in UK. If any of these 3 is met, then he's automatic UK resident. Otherwise, go to step number 3. Step number 1, automatic UK non-residency test. Spending less than 16 days. Condition number 2, less than 46 days and not a resident in the previous 3 tax years. Condition number 3, less than 91 days and working full-time overseas. None of them met, go to step number 2. If step number 2, one of the condition also met, he is automatically UK resident. Spending 183 days or more in UK, working full-time in UK, and he has only home in UK. Question will give you this data to analyze. Now you have declared test 1, test 2, both not applied. Go to test 3. Test 3 is a manual test. Manual test means sufficient ties test. You have to see whether there are some ties, some relationships given here. Okay, so generally we have 5 ties given in the question. Please listen to me very carefully. Okay, and there is a table going to be given to you in the exam. Now, when I say going to be given to you in the exam means this table you have to remember and learn. When you do more questions, it will be still in your head. These ties you have to remember. Only that table will be given to you as a help in the exam. So I'll show you here the table first. I'll revise all this and then we do questions. This table is going to be given to you in the exam. Okay. Now, please read this table. This table says, if you're spending less than 16 days in UK, now automatic UK resident, automatic UK non-resident. So automatically not resident, automatically not resident. Pretty clear. Now, if you're spending days between 16 to 45, but you're not meeting that criteria of previous 3 tax years you were resident. If he was not previously resident at all, then that criteria will be met. He'll be automatically not resident. Because if you have never been resident, the 3 years are also met. Okay. However, he will be a resident if 4 or more UK ties are met. I again repeat, if the days spent in the current year are between 16 to 45, he will be a resident if 4 or more UK ties are met. What are UK ties? Now let's go into the UK ties. So as per the rules of HMRC, there are 5 UK ties that are given. Now it's up to you to see in the question which UK ties are getting applied. Which is the first UK tie? First UK tie is he has close family in UK. That is spouse or partner or minor child. Only these are covered under close family. Okay. So number 1 tie, if he has any close family member in UK, whether a spouse in UK or spouse, or we call partner, you know who is a partner in UK. Whenever I say spouse relationship, like husband-wife, in the same way, there are civil partners which are legally allowed, which have a live-in relationship. So they are registered as civil partners under the Civil Partnership Act. Okay. So if whether the spouse of the individual or the civil partner of the individual or a minor child of the individual, if they are staying in UK, then 1 tie is getting met. Number 2 tie. He has accommodation in UK in which he's spending at least 1 night in the tax year. He has an accommodation in UK. Okay, accommodation can be anything, a motel, hotel, house, anything. He has an accommodation in UK and is spending minimum 1 night in UK in the tax. He does substantive work in UK in the tax year. That is working for at least 40 days in the tax year with minimum 3 hours each day. Third condition is he's doing substantive work in UK. Substantive work in UK in the tax year means he's working for at least 40 days in the UK for minimum 3 hours each day. Okay, that is called a substantive work he's doing in UK. Third relationship or third tie is he's spending at least 90 days is spent in any of the 2 previous tax years. Okay, for example, if the current tax year is 2021, then the previous 2 tax years are 1920 and 1819. In any of these 2 previous tax years, not combinedly, I'll not add 1920 and 1819 days. No, individually in any of these 2 previous tax years, he's spending minimum 90 days in UK. In any of the tax years will also do, not necessarily both of them. Any of the individual previous 2 tax years, he's spending minimum 90 days in the UK. Fifth tie is if the individual was UK resident in any of the 3 previous tax years. So if the individual was a UK resident, if any of the 3 previous tax years, then we will see whether he has spent more time in UK in the current tax year than any other countries in the world or not. I'll explain what is. So if the individual was UK resident in any of the 3 previous tax years, then we will see. First condition is, please see whether he was a resident in any of the 3 previous tax years or not. Please see, here we don't need all of the 3, any of the 3. So if in the previous 3 tax years, he was a UK resident, like for example, if I'm taking the current year is 21-22, then the previous 3 tax years are 2021, 1920 and 1819. If in the previous 3 tax years, any of them, like in my example, I've taken that in 1920 was a UK resident. So if any of the previous 3 tax years, he was a UK resident, then in the current tax year, please see the days spent in UK. I've taken the example where in Israel, he spent 80 days, India 80 days, US 85 days, Australia 30 days, in UK 90 days. It is the maximum days spent in the current tax year comparing to all the other countries that he has visited. Yes. So then his 5th condition is getting met. Okay. I'll again repeat these 5 ties and then we'll look into the table. Then we go. I'll repeat all of them again. So 5 ties mentioned for sufficient ties test is number 1, he has got close family tie, we call it, close family in UK. Spouse, partner, civil partner, or minor child, I'll call civil partner. Condition number 2, he has accommodation in UK in which he is spending at least one night in the tax year. Number 3, spending minimum 90 days in the any of the previous 2 tax years in UK. Number 4, he is doing substantive work in UK, that is working for minimum 40 days in the tax year for minimum 3 hours each. 5th, if the individual was UK resident in any of the previous 3 tax years, then you will see whether he's spending the maximum days in UK than any other country in the world in the current tax year. These conditions will not be given to you in the exam. This you have to remember. So when you do questions, they automatically get registered. You can. Okay, so you can remember it as close family tie, accommodation tie, maximum days spent tie, okay, 90 days tie, and substantive work tie. 5 ties are there. Okay, now let's read the table. So the table says if the individual is spending less than 16 days, automatically not UK resident. You know it. Spending between 16 to 45 days, he was never a resident, automatically not UK resident. If he was a previously resident, then he would be a resident if minimum 4 UK ties are met. So in the question, we will see whether minimum 4 UK ties are getting met or not. If they're not getting met, then he's a non-resident. Third, if he's spending 46 to 90 days in the UK, he would be a resident if minimum 3 UK ties are met. And he would be a non-resident if 4 UK ties are met. 96 to 120 days. He would be a resident if he was previously resident if minimum 3 UK ties are met. If he was never previously resident and he's meeting 4 UK ties, then he would be a resident. Otherwise, in both the cases where the conditions are not met, then he'll be a non-UK resident. Okay. Then the days spent are 91 to 120 days. He would be resident if he was a previously resident. Previously means any time previously. Maybe 20 years before. That will also do. So if he was previously resident, then minimum 2 UK ties. Never resident before, minimum 3 UK ties. Likewise, for 121 to 182 days, if he's spending, he would be resident if he was previously resident with minimum 1 UK tie. And not previously resident, minimum 2 UK ties. If you're spending 183 days or more, no problems, automatic UK resident. We have seen that in the test. Okay. Now, a day in the UK is any day for which the individual was present in the UK at midnight. So suppose you have a flight that landed in UK at 9 o'clock. Okay. And the morning, suppose you are there in the UK, evening to morning, midnight, you were there in UK, 1 day spent in UK. Okay, now let's look into the chart again. And then we go into the questions. Okay, people? If you have any doubts and queries, come on, take to me. Okay, give it to me, those queries. I'll resolve them. So let's just look at the chart again. First step, does the individual satisfy any of the automatic overseas test? Yes, non-resident. No. Does the individual satisfy any of the UK residency test? Automatic? Yes, UK resident. No. Does the individual satisfy any of the sufficient ties test? The ties? If yes, UK resident. If no, non-resident. Automatic overseas test, let's do. Repeat it again. First condition is an individual will automatically not be a UK resident for the whole tax years if any of the three conditions are met. They are not met, go to automatic UK test. Any of the three conditions are met, or he's a UK resident. Sufficient ties test. Then the 5 ties I told you, having close family in UK, having accommodation in UK where he's spending minimum 1 night, doing substantive work in UK, being in the UK for more than 90 days during either of the 2 previous tax years, spending more time in UK than in any other country in the world in the tax year. This is only applicable if the individual was a resident in any of the previous 3 tax years. So this is a basic condition first. For the 5th tie, if he was a resident in any of the 3 previous tax years, only then we will see the maximum stay. Sometimes question will confuse you. They will give you detail about the days spent in the country, different countries. But they will, you may just overlook that he was not a resident in any of the 3 previous tax years. So then that day spent is just a wasteful information given to confuse you. So don't get trapped into it. Okay? Let's do a question, people. So a very simple question. You're going to answer it quickly. But remember to apply the steps in a sequence. Automatic non-UK test, automatic non-UK overseas test, right? Automatic UK residency test, and then the sufficient ties test. You will apply the test in the sequence. Okay, tell me the first one. I'm sure you can do it. In one tax year, Sally spent 15 days in the UK. Very good. Deepika, correct. Hiril, correct. Ashna, correct. Wonderful. Give me all, everybody, whether you're wrong or right, doesn't matter. Just tell me, resident, non-resident. Jose, Madhvi, Monica, Omer, answer. Very good, Omer. Very good, Madhvi. Very good. And you'll not write not UK, Jose. Non-UK resident. Wonderful, Jose. Monica, your answer was pending. Come on, be quick. Answer. And mark your messages to me directly, everyone. Okay? Wonderful, Monica. Okay, Jose, mark it to me directly, not to everyone when I'm asking questions. Okay, let's go to the next one. Now you'll run your brains. If you want me to turn back to that screen where I've summarized the rules, I'll turn it back. Okay, no problems. Jimmy has lived in UK, in Tokyo, where he owned a house all of his life. He came to the UK on 1st May 2023, having sold his house in Tokyo the month before. He decided to buy a flat in London, which he uses as his only home. Jimmy lived in the London property till 30th September 23. Then he went on a backpacking holiday for a year. Please tell me with reasons he's a resident or a non-resident for that tax year. If anybody of you who wants me to scroll back to anything, please tell me, I'll do that. Give me the answer in the chat box. Give me the reason also, Madhavi. Yeah, I'll show you the page with conditions. This is the 2 conditions. The answer is from the either automatic overseas test or UK test only. Right now I'm telling you. So he will just correct your answer. Very good, Amir, correct. Very good, Deepika, correct. Very good, Madhuri, correct. All of you else also, just think and give me the answer. Doesn't matter you're wrong or right. I just want you to answer. So Hiral, Monica, Ashna, Joe's answer. The question says that he is in UK on 1st May. Before that, he was in Tokyo. He owned a house there. However, he sold the house and then he came to UK and he got his only home in UK. And then on 30th September, he left UK for holidays. So please tell me, he's a UK resident or non-resident and the reason. Wonderful, Hiral. Monica, give me the reason. You're correct. Give me the reason. Joe's answer, I'm awaiting. Ashna, I'm waiting for the answer. Give me the reason, Jose. You are correct. Give me the reason. Ashna, what's the answer? Very good. Very good. Okay, Ashna, why do you think he's a non-resident? Give me that answer. Monica, correct. Jose, give me the answer. The reason. Okay, the correct answer is he is a UK resident. Okay, why Ashna and Jose, please focus. Because of the point that their only home is in UK. We don't need a home to be in UK for the last 20, 30 years. Just in the current tax year. If in the current tax year, he has the only home that is in UK, then he is a UK resident. The tax year starts on 6th April, ends on 5th April, right? He is in UK on 1st May and he sold the house 1 month before. That means sold the house before 1st April. So for this current tax year 23-24, from April till the end of the tax year, he was the only home that he had was in UK. So because of this, he is a UK resident. Are you now clear? Jose and Ashna? Guys, clear? Okay, let's go to the last one. It's a sufficient ties test. You want me to scroll back? I'll scroll back. If you want to click a picture of this question, just keep a picture. I'll scroll back. Andy was UK resident in the tax year 22-23, but was only present in the UK for 80 days in that tax year. He does not satisfy either the automatic test or automatic overseas test or the automatic UK test in the tax year 23-24. In the tax year 23-24, Andy spent 48 days working 5 hours a day in the UK where he was present at midnight. Andy's wife lives in the UK in their joint home and Andy lives in this home when he is in the UK. Andy spent the rest of the tax year 23-24 in Spain. Please tell me with the reasons where Andy is UK resident in the tax year 23-24 or not. I'll I'll make you go back to the table. So I really request all of you to please click a picture of the table or I'll send a picture in the group. Okay, I'll send this picture in the group. And do you want me to refer back to any conditions? Then I'll just refer it back. I'll take you to that point. Let's go step by step. Okay, I think let's do the question with me. First thing that I want you to answer is, looking at the question, how many days he's there in the UK in the tax year 23-24? Okay, Ashna, Hiral, and Madhvi, I got your answers. Now let's just support it. All of you, please type that first. Looking at the question, for how many days he was in the UK for the current tax year 23-24? Okay, so I'm getting answers. Some are saying 48, some are saying 80. Read the question carefully. "48 days" is the correct one. The reason being, let's read the question properly. In tax year 22-23, he was present in the UK for 80 days. Okay, and in this tax year, he was present in the last tax year 22-23 for 80 days. Am I clear with this? Hiral, current tax year is 23-24. We will always see the days spent in current tax year. So in the current tax year, he has spent 48 days. Very good. Okay. Now see the table. I've shared the table with you in the group. You can just refer to that table. It's just opening up. Give me a minute. Okay, so we will see the table, and in the 46 to 90 category, please see, was he a previously resident? That we have to see, no, in order to categorize. "46 to 90. We are clear on this, that it is going to be in this category. I hope everybody's clear for this. Now, was he a resident or a non-resident in the previous tax years? Was he ever a previously resident? Let's see that question and let's answer it. There is some problems. Yeah, Hiral says it's written that he was a resident in the previous tax year. Let's quickly look at it. So the question says he was a UK resident. So he was previously a resident. So now we have to meet three ties. Okay, they are accommodation tie, family tie, 90 days tie, and then you have substantive work tie. And if he was a previously resident in any of the three previous tax years, then the day spent tie. So three ties, any of these five, you'll see three ties are getting met or not. Let's see the question. In the tax year 23-24, Andy spent 48 days working 5 hours a day in the UK where he was present at midnight. Substantive work, minimum 40 days, 3 hours a day. So one condition is getting met. Okay, very good, Deepika. Correct answering. Perfect reasoning. Now the second is, Andy's wife lives in the UK in their joint home, and Andy lives in this home when he is in the UK. Andy spends the rest of the tax year in Spain. So Andy's wife is in UK, family tie. Number 3, Andy lives in this home. This is their joint home. That means it is also the home of Andy. He's living in this home when he's in UK. So he spent 48 days. That is minimum 1 night he has spent. 3 conditions are met. Fourth is, if easy spending minimum 90 day in the previous any of the previous 2 tax years, you will find that he spent only 80 days, not 90 days. So that condition is not met. And was he a resident in the previous 3 tax years? The question doesn't say anything. And even if we assume that he was a resident in the previous 3 tax years, he has spent only 48 days in UK and maximum days in Spain. So the other 2 ties are also not met. 3 ties are met. This is what we require, minimum 3 ties. So we declare that he is a UK resident for the tax year 23-24. Is everybody clear with it? Please revert. Ashna, Hiral, Jose, Madhvi, Omer, are you clear? Yeah, your answer is correct. Okay, now let's move ahead. Interesting? So are you finding taxes interesting? Yeah, I know taxes are very interesting. But yes, you have to give efforts also, guys, because today we had less rules, no? As we go progress into the syllabus, there's going to be more complex rules coming up. Okay. Okay. Now I'll go into the understanding. I won't be taking a lot of portions for that because I need you to absorb everything for tomorrow. Okay. But I'll be taking into the portions how to calculate the individual's taxable income. So now we come to the core agenda that now we have to calculate the individual's taxable income. If he's a resident, entire worldwide income will be put to tax. If he's a non-resident, only the UK income will be put to tax in the current tax year. Okay. Please remember when I say current tax year, it is from 6th April to 5th April. Just allow me a moment. Yeah. So let's start understanding the performer of taxable income. Now, first and the foremost thing that I want to put up to all of you is this performer has to be followed exactly in the same way. That means whenever you're calculating taxable income of an individual, total income of an individual, net income of an individual, I'll make you familiarize with these terms. You always have to follow compulsory this performer. You cannot make changes to this performer. Forget about how we do in India. Okay, so don't correlate with the Indian taxes as I told you in the beginning. Let's start fresh with this performer. As per this performer, the income of the individual is divided into precisely three categories: non-savings, savings, and dividend. Non-savings income is, or basically I'll start reverse. What is a dividend income? Dividend income is the dividend income from the dividends, on the shares earned. That is the dividend, the income which is like on the shares we earn dividend income, that dividend income is coming here. Yeah, on the equity shares that we earn the dividend income. Okay, we'll not go into detail of it because the questions will will tell you dividend income on the shares. So very simple, they're going to put. They can be equity shares, they can be your preferred stock. So like we have these stocks, on both we earn dividend income, right? Preference shares we call as preferred stock, equity share we call as ordinary shares. So in ordinary shares as well as preferred stock, we earn dividend income that will be coming under the heading dividend. The second column is for savings income. Savings income is like the income earned from investments. Like you put your money in the bank, you earn income from it. You put your money in any investments, you earn interest income. So any kind of interest income that you earn, whether from the bank, financial institutions, any other institutions, or any other kind of interest income, whatever is coming, all interest income will be clubbed here in the savings income. Yeah, interest income on the bank deposits. So see, precisely just remember it as any kind of interest income will come under the savings income. So, there is one more terminology that I will just introduce here. So we call a building society interest will also come here. What is a building society interest? And just like we have cooperative societies in India, in UK, it's like a financial institution which is owned by its members as a mutual organization. Building society offers banking and related financial services like savings and mortgage lending to its members only. Okay, closed group. They generally provide home mortgages, and borrowers and depositors are member of the building society. Okay, so like for example, there is an example I've written here for the building society. Nationwide Building Society is world's largest building society. Okay, so they generally come for real estate purposes. That is why the term building society is there. Okay, so they generally provide home for home mortgages, and borrowers and depositors. They all are member of the building society. Okay, I hope you're clear. So now let's look into different kind of income that you can come across. Like we can have trading income. Trading income is the income from business, profession. So like I have trading income. Anyone who's doing a business will have trading income. The sole traders will have trading income. So like we have the partners in the partnership, their income will also be coming under the trading income. So now we have trading income. If there are any losses applicable, I'm not taking losses right now. The reason being we'll take losses, when we cover those trading income, trading losses. But if there is any trading losses applicable, we will give that relief here. We will reduce by the losses the trading income, and we will get the net trading income here. If there is any employment income, that will also be part of non-savings income. If there is any property income, like the rental income that we say, the rental income earned on the property will be covered here in the property. UK dividends, if any earned, UK dividends will come here in the dividend income. Because we're not covering any overseas incomes, I'll not cover any overseas dividend in tax syllabus. Building society or the bank interest, as we covered, will come here in the bank interest. That is, any interest income will come here. Other kind of interest will also be coming under the savings income. So like I said, all the interest income will come under the savings. Now it will be written, the columns will be made in the same way: non-savings income, savings income, and dividend income. Okay. Now you will get the total of these three incomes and you will get total income. From total income, we get two benefits that reduces our total income. One is qualifying interest. I'll explain all these terminologies step by step. Okay. So we reduce qualifying interest from that, and we also reduce other losses relief. Again, I'll not cover here other losses relief because we have carry forward relief, carry back relief. All this we will cover when we do the losses chapter. So just right now, just keep it like that. From total income, we'll reduce the qualifying interest and the other losses relief. Or you just remember it as losses relief. When you reduce it, you get net income. So I hope the total of all the incomes give you total income. When you reduce qualifying interest and loss relief from it, you get net income. From net income, because this net income is very important. Various places we are going to calculate formulas with respect to net income. Net income is very important. From net income, we reduce personal allowance and we get taxable income. Okay, So from net income, we reduce personal allowance and we get taxable income. So what is taxable income? Net income less personal allowance. So it is an allowance given to the individuals, and for the current tax year, the allowance is 12,570. It will be given to you in the exam. In case if you forget it, you will have a tax rates allowances table given to you, wherein that table of sufficient ties test and this information both will be given to you. Okay, tax rates will also be given to you. You don't need to learn them. Okay. So now I hope I'm clear. I'll just elaborate all this. Then we go into the detail of one by one. So repeating it, we have three major kinds of income: non-savings, savings, and dividend income. They are precisely the trading income, employment income, property income. All this will come under non-savings income. Save in any interest income will come under savings income. Dividend income will come under dividend income. Get the totals, reduce qualifying interest. You will always reduce them in the sequence. That suppose if I'm reducing qualifying interest and if my non-savings income is full, even after using the qualifying interest, my non-savings income has become zero. See, on income levels will never become negative. They will only be reduced to zero maximum. Suppose my non-savings income is 5,000. I have qualifying interest of 6,000. So after adjusting non-savings income, I've left with 1,000. That 1,000 I can use against savings income. Then balance I will use against dividend income. So I'll go in this sequence: non-savings, savings, and dividend. Okay. Likewise, personal allowance will first be used against non-savings income. Any remaining personal allowance will be used against savings income and then dividend income. Personal allowance cannot be carried forwarded to the next year. So it's an allowance. If it is not fully used, it will lapse. It will not be carried forwarded to the next period. Okay. I'll explain you now with an example before I go into the detail of the topic. So just look here. I've created this example for 22-23. So just look here, please. Now, suppose I've taken this example. Income from employment will come under non-savings income 52,000. Building society interest will come under savings income 1,400. Dividend income will come under dividend income 6,000. Total income is this. Now we reduce qualifying interest relief if it is there, and we will reduce loss relief if it is there. In my example, I've assumed it is not there. If it is not there, then net income you will get here. Clear? Till this point, are you all clear till net income? Anyone who's got doubts till this point, please put it in the chat box. Clear? Now from net income, I'll reduce personal allowance. So what I was saying, suppose this net income here is not 52,000, it is 2,000. I cannot reduce 12,570 and make it zero. I will make it zero here. Okay. Now from I can only use 2,000. But I still have my personal allowance remaining. So I'll reduce 1,400 from here. I can make this also zero. But I still have more personal allowance remaining. So I can reduce 6,000 from here. So my entire income became zero. But still it is not 12,570. It is only 9,400. So what about the remaining? Remaining will lapse. You cannot do anything because you made your income zero. Now you cannot do anything. There is a clause of transferable PA also, transferable personal allowance, that I will cover tomorrow. But right now, for the time being, just understand that if personal allowance reduces your income to zero, and then also if you have any personal allowance remaining, that will be lapse. That will not be carried forwarded to the next periods. Okay, everybody is now clear with this? So now let's take this example further. My net income is here. My PA is fully adjusted with NSI only, non-savings income. After this comes my taxable income. That means on this income, I'll pay taxes. Okay. Now what rates are applied, how to calculate tax liability, I will cover. I'll cover step by step gradually. Till this point, any questions? Please put them in the chat box. Okay, now let's go forward. Now let's calculate the tax liability. So let's go into the calculation of tax liability. You will always calculate the taxes category wise, non-savings, savings, and dividend income. And let you know the tax rates. Non-savings and savings have the same tax rate. Dividend income has a different tax rate. For understanding that, let's understand the tax rates. So we have three slab rates. Please follow here. First slab rate is, now in India, like we have a minimum slab rate, right? Minimum exemption. Income will beyond 2,50,000 is subject to taxes. We don't have any minimum slab rates. Even if a pound 100 is earned, it is going to be subject to taxes. Okay, so now the slab rates are from 0 to 37,700. The basic rate band, the tax is 20% for the basic rate taxpayer. How do we categorize the taxpayer category? I'll explain. Okay, so please understand, when the total of taxable income means you take the total of it. Here the total is, adding all three, the total is 46,830. Now just see, is the total up to 37,700? No, it is beyond that. So if the total of taxable income is up to 37,700, we call that the person is a basic rate category taxpayer, and this is called as basic rate band. And the tax applicable is 20%. Now, if the taxable income is between 37,701 to 150,000, this is the second slab, then we say that it is a higher rate band. Okay, this is known as higher rate band, and the taxpayer will be called as higher rate taxpayer. So if you see in the example, the total of taxable income is around 48,000, 46,830. 46,830 means it is falling in the second band. So we call the taxpayer as higher rate taxpayer, and the band maximum tax rate that is applicable to him, maximum is 40%, which is the tax rate for higher rate band. Now, if the taxable income total is beyond 150,000, we call the taxpayer as additional rate taxpayer, and this is an additional rate band. Okay, and the tax rate is 45%. This is the maximum rate. This data will be given to you in the exam. You don't need to memorize it. So I'll repeat. The total of taxable income is up to 37,700. It's a basic rate band. And the taxpayer is a basic rate taxpayer, taxed at 20%. If the taxable income total is between 37,701 to 150,000, it's a higher rate band, and the taxpayer is a higher rate taxpayer, taxed at 40%, maximum 40%. Okay, it is a slab wise taxing. We don't tax directly 40%. Till 37,700, we will tax 20%, and beyond 37,700, we will tax at 40%. If the taxpayer his income is beyond 150,000, then he's called as an additional rate taxpayer, and this is called as additional rate band. And that maximum tax rate is 45%. So we can say that minimum tax rate applicable is 20% and maximum is 45%. There is no surcharge, no cess, nothing applicable in UK tax. It's a straight away this tax. Okay, now let's do the calculation of taxes for NSI first. Individually, you will see. In the category of non-savings income, what is the taxable income here? 39,430. Is this beyond 37,700? Yes. So now I will break it in two rate bands. from 0 to 37,700. What is the income? 37,700. So for this income, I will apply 20% tax. 37,700 will be subject to 20% tax rate. And the balance income here, how much is it? 39,430 less 37,700 will be taxed at 40%. Why? He's a higher rate taxpayer. That means here only his basic rate band is crossed. Now he's into the higher rate band. Okay, and we will gradually see if gradually higher rate band also gets crossed, then we apply additional rate. If the category of the taxpayer is an additional rate taxpayer, so gradually you will see the rate bands crossed. Here, though, in our case, only a basic rate band is crossed. The reason being, he is a higher rate taxpayer. So he's not additional rate, the higher rate band will not be crossed. Fine, I repeat here, 39,430 till 37,700, 20%, beyond 37,700, 40%. Please always check. The total I've taken here is 39,430. It is matching with this total. Till this point, any questions? All clear? Okay, let's go to the next one. Okay, now for savings income and dividend income, there are some benefits given by the HMRC, which is called as nil rate band. Nil rate band means for the savings income, based on the category of the taxpayer, okay, nil rate band means 0% tax. For that particular level of income, 0% tax will be levied. Please be very careful. Very carefully look into my screen and listen to me. So for the savings income only, that means the income which is there in the savings income written there, only for that income, there are two nil rate bands given. Nil rate bands means that much of income will be taxed at 0% rate. So two nil rate bands are there. First nil rate band is a 5,000 starting nil rate band. This will be given to you in your tax rates allowances chart in the exam. You don't need to memorize it. 5,000 starting nil rate band. And the second nil rate band is based on the category of the taxpayer. I will first take the first nil rate band. 5,000 starting nil rate band. This, for explaining this, I will take care of 3 examples. Please look here carefully. What is 5,000 starting nil rate band? Just see NSI. How much is NSI? And how much is savings income here? My non-savings income is 2,000. And my savings income is 7,000. Starting nil rate band says just before savings income, please look your non-savings income. Just check if your non-savings income is less than 5,000 or more than 5,000. If it is more than 5,000, then this 5,000 starting nil rate band is not there. However, if non-savings income is less than 5,000, then just take out the difference. Like here, non-savings income is 2,000. 5,000 minus 2,000 is 3,000. Now, for savings income, I will get initial 3,000 at 0% rate. Out of this 7,000, 3,000 will be at 0% rate. Just keep listening to me for the other 2 examples, and then if you have a query, ask. Second example, there is no non-savings income. And doesn't matter for dividend income, because dividend income comes after savings income. The income which comes before savings income is non-savings income. So therefore, my concentration would be on non-savings income. Now, if your second example, if your non-savings income is 0 and your savings income is 8,000. Now, please see how much is the non-savings income before savings income? 0, less than 5,000. So when you do 5,000 minus 0, you get full 5,000. That means for savings income, full 5,000 will be taxed at 0% rate. And savings income that will be taxed would only be 3,000, the remaining one. Are we clear? The starting nil rate band available here is 5,000. Okay. Now let's see the third example. Just forget about this. You will understand this once I'm doing the second, giving you the second understanding then. Now in the second example, my non-savings income is 8,000. Say, even if savings income is 3,000, won't matter. I'm taking an example. Savings income is less than 5,000, doesn't matter. Please see if non-savings income is less than 5,000 or not. Now we can see non-savings income is not less than 5,000. If it is not less than 5,000, then no starting nil rate band is available because full 5,000 is used by NSI. No starting nil rate band of 5,000 is available to savings income. Okay, full 3,000 will be put to tax. Clear? I repeat again now. So 5,000 starting nil rate band, in order to apply to a savings income, you will always see the level of non-savings income. If non-savings income is less than 5,000, you will always get some starting nil rate band. If it is 5,000 or more non-savings income, you will not get any starting nil rate band for savings income. Nil rate band precisely means if it is 3,000 nil rate band available, that means out of 7,000, 3,000 will be taxed at 0%. 4,000 only will be taxed at 20, 40, 45, whatever is the rate applicable. Here, if I say it is 20%, is a basic rate category because it is not more than 37,700. So the balance 4,000 will be taxed at 20%. Are we clear? Anyone who's not clear, please put up in the chat box with the starting nil rate band only. I'll take the second nil rate band now, but is starting nil rate band clear? $37,700 is the slab rate for putting to tax. 37,700 will define whether to tax 20%, 40%, 45%, what is applicable. This is the slab rates. Okay. We will be doing the question gradually. Tomorrow we are going to take up only questions. Today I'm just giving you the topics so that tomorrow we revise this and we do more questions. No issues, no issues. It's perfectly okay to forget it in the first class. Okay, so now we are clear with starting nil rate band. The second nil rate band, which is applicable to the savings income, is based on the category of the taxpayer. So like here, based on the taxable income, we have categorized that the taxpayer is a higher rate taxpayer, right? Because the total of taxable income is beyond 37,700. Okay, so if he's a higher rate taxpayer, he will get additional nil rate band of 500. That means apart from the starting nil rate band, he will get 500 as the additional nil rate band that will be taxed at 0%. If he's a basic rate taxpayer, the additional nil rate band is 1,000. That means apart from starting nil rate band, additional 1,000 will be taxed at 0%. If he's an additional rate taxpayer, no additional nil rate band will be there. If starting nil rate band is applied, then okay. Otherwise, full income will be taxed normally. Let's take the example here further. So I'm taking here a case where the individual has 2,000 NSI and SI is 7,000. Now you know that 2,000 in SI. So starting nil rate band of 3,000 will be there. That will be taxed at 0%. How much is remaining now? 4,000. Out of 4,000, there is additional savings nil rate band will also be available. Now his income is only 9,000. That means it is coming in within 37,700. So he is going to be a basic rate taxpayer. Basic rate taxpayer will get how much? Will get 1,000 as the 0% nil rate band. So out of 4,000, 1,000 will be savings nil rate band. Now how much is the income remaining? 3,000. 3,000 will be taxed here at the rate 20%. Okay, so how much it will be? Just a moment. 600. So the tax would be 600. Okay, now take the next one. NSI is 0. Savings income is 8,000. Full 5,000 is available as nil rate band. 3,000 will be put to tax. Out of 3,000, 1,000 will be the savings nil rate band. The reason being is a basic rate taxpayer. Now how much is remaining? 2,000. 2,000 will be put to tax at the rate 20%. Clear? 400 will be the tax liability. Now next one, again is a basic rate taxpayer. 8,000 is the NSI, SI is 6,000. Starting nil rate band will not be there because it is more than 5,000 here. So his savings income is 6,000. He will get a nil rate band of 1,000 as he is a basic rate taxpayer. So balance 5,000 will be taxed at 20%. Clear? This is all I'm going to cover today. We are going to revise till this much tomorrow, and then we'll cover the dividend income rules and go into the taxability, and the other rules will apply. So we'll continue with chapter 2 tomorrow. Okay, any questions and queries? Everyone, please put it in the chat box. Are you able to understand today's session? We'll take a recap of this performer and the calculations, working, everything tomorrow before we begin with the questions. So guys, are you all clear with what we did today? Any questions, any queries? I know there will be some doubts, in application because this is we were looking at the first time. So tomorrow when we do questions, I'm sure things will be much, much clearer. Good. Ashna, are you clear? Any questions? Deepika, any questions? Hiral, Jose, any questions? Monica? Okay, great. Then just recap what we have done. Tomorrow we'll be doing some questions of chapter 1 and we will also be covering the remaining of the topics. Okay, see you all tomorrow. Take care. Please do revision of what we have covered today and let's meet tomorrow. Okay, take care. Bye-bye.